Friends, I welcome you all for the half-a-day seminar on indirect tax proposals recently held Budget Union Budget 2022. To discuss this on class by class, we have two eminent speakers, none other than Rajesh sir and Jatin Christopher sir there with us. I request and also to grace this occasion program, we have with us chief guest PV Nagaraj Gupta sir. I request chairman to escort Nagaraj Gupta sir onto the dais. I also request escort speakers onto the dais. Welcome with bouquet. Thank you, Chairman. There is a small notice. On Monday, 21st February, the new chairman and committee is going to take over. I invite all the members, grace the occasion and bless and wish the new team and new term. Also, in the afternoon, we have a program of a day seminar on revised schedule 3 and interplay with Caro. To discuss on this topic, we have an eminent speaker, none other than MP Vijay Kumar and Gurraj Acharya. I request members also to register and make use of this session. With this, I request Chairman to welcome a render address.
Thank you, Vice Chairman Srinivas. Hearty welcome to Jnanarjane, Empowering Excellence. Friends, today is the half-day seminar on indirect tax budget proposals. There are many changes I heard, and the new this GST annual return filing also is coming to, I think this month end is the last date. So in that regard, we have thought it's appropriate to have a session on indirect tax. To inaugurate this indirect tax half-a-day seminar, we are really fortunate to have our chairman for the year 94-95, CAPV Nagaraj Gupta sir is with us. On behalf of Bangalore branch and on behalf of all the participants, hearty welcome. Friends, we are really fortunate in Bangalore. Bangalore is a hub for the indirect tax. Indirect tax, all the amendments, so many books, so many things happened in Bangalore. So and Bangalore branch is really fortunate in that regard. So whenever we need faculty, we remember CA Jatin Christopher sir, CA Rajesh TR, and many more. So whenever we call, they happily agree and come here and disseminate the knowledge. They are regular readers and they put, I think, half of their time for reading. And another 25% maybe they are disseminating their knowledge. So we are really fortunate today. We have our Jatin Christopher sir on behalf of Bangalore branch, hearty welcome. We have CA Rajesh TR. Hearty welcome to CA Rajesh TR on behalf of Bangalore branch and all the participants. Friends, today's program is actually the last program of this current term. The new team is, as our Vice Chairman already mentioned, is going to take over on this Monday, 21st February. And The current term, the last program is of today's, and the term last 1 year we have conducted several programs and many other social cause programs too for the benefit of general public. One such program is we have trained around 80 students of final year BCom in government RC college. We have provided 110 hours practical training to them of final BCom students. And after completing, that's not the virtual training, it is a hands-on physical training in their computer lab. And we provided tally accounting, income tax, GST, and TDS, and many other practical issues, and also soft skill. So after training of 110 hours, we conducted a campus placement, and almost all the candidates placed in that campus placement. And I think probably they are all well settled in their job now. So that is one such thing. And another important thing we have conducted in RC college. Again, it's a government college. There are a good number of students coming from economically poor background. Such people are getting now the CA foundation course. That again, a subsidized CA. Only just 2,000 rupees we are charging in that college. 65 students joined for this CA foundation course. The training is going on. So they are all going to appear this May 22 exam for CA Foundation. So these both the programs will continue year after year, and the incoming chairman also is agreed to continue that, so that subsidized CA Foundation course is sponsored by one of the corporate from their CSR fund. The subsidy comes from them. Branch will not contribute in financial terms. However, all logistics and arranging faculties, many other thing is happening from the branch side, which has happened in this year also with the support of all the managing committee members, and this program can be continued year after year. Friends, in addition to that, we have conducted several programs for the benefit of members, students, and all. So the year is went on fruitfully. With that, once again, hearty welcome to all the members and students who have joined here and who have joined virtually. Once again, hearty welcome to you. Over to Srinivas.
Thank you, Chairman. I request our past Chairman Ravindra S. Kore to address the gathering.
Respected Chief Guest Nagaraj Gupta sir, and the speakers of the day, Jatin Christopher sir and Rajesh Kumar, and Bangalore Branch Chairman CABT City, and Vice Chairman Srinivas, and all the members present physically and virtually. As Chairman said, his term is going to an end as a Bangalore Branch Chairman. The 52nd Chairman is served for the very pandemic, the before beginning of the second wave. So he started. So Bangalore is a big branch in all over India. It's again proved that we have the best branch because we are conducting more unique programs across the India. Many branches has been following us. My compliments to the chairman CABT City sir for his excellent job. It's a thankless job. The people, the hard time he has to spend 24/7. We have to be alert, and the struggle is not an easy. And 21st on Monday, Srinivas is going to take charge. So definitely he will take it in further height, I hope, because we have served all together 6 years in the branch from 2016. Myself, Srinivas and BT Setti sir entered into the Bangalore branch 2016. We are serving the branch. The one dream was unpending the conducting convocation, which was approved by the Central Council in 2020 itself. But unfortunately, COVID came. Again, it is came back to the Bangalore, and the credit goes to our chairman BT Setti sir. My compliments, because we had a convocation. Again, our Central Council members, the Dayaniva Sharma and Kota Srinivas also helped us to be conducting branch. Yes, this legacy will continue. The Bangalore branch, the past chairmen, yes, BT Shetty sir, the major two units I wanted to mention here is the skill training program conducted in the RC college. We used to conduct, and our motto was to make it them employable. So we have conducted, they were given training and made an employment. 100% employment is being given to all the students. They will say who is trained. The Institute of Chartered Accounts of India is trained. Because of that, we got the job. It was on CSR activities. Bangalore branch is following, and yes, a smaller way in Jayanagara College it started, but successfully Pakka it is implemented by CABT Shetty sir. Again, my heartful congratulations to the chairman. And one more thing, the career counseling. The students' input has to be come. Yes, we have begin. I thank Shivram, but 2019-20 he was the chairman. The committee was taken. He was started the key to conduct the career counseling. Yes, in 2021, some more I increased, but this year, fabulously, 254 colleges and 37,000 plus students, the career counseling is given. All over India, it is a big number for the Bangalore branch. Again, congratulations to the BT Shetty sir. The reason why I am mentioning the 1 year the chairman will come again. Yes, Srinivas is more capable to do it because he has a heading 9 members managing committee. But unfortunately, we have restricted only 5 to 6 members. Why? The reason is that 2019 we all come together for the 2016 we came to the branch along with BT Shetty sir. I am also going out. It doesn't mean we are with the branch. We are supporting the 19 to 22. This 3 years terms. That few as a committee, all 6, 7 members plus 2 ex officio members. We have just milestone to achieve. Some highlights I am going to give. The one is we have created our Bangalore branch employees. They does not have the PF is not applicable for us. The 1922, this all managing committee members took a decision to create a post-employment benefit scheme for our employees. Because any employees left, because only our branch we are recruiting. There is no employment from the head office. So one activity to safeguard our employees because they are working for the branch. So that major things the Bangalore 1922 all committee members, my heads up to the all committee members and all the members. So other things as regularly, I hope, I wish once again congratulate BT Shetty sir for his wonderful job and also previous chairman, before previous Shivram Bhatt sir also joined. And now Srinivas is going to take charge on 21st. I wish him best of luck. That I thank personally for all the members for giving an opportunity to serve for the Bangalore branch the last 6 years. Thank you one and all.
Thank you, Ravindra S. Kore, for your kind words. Give him a big round of applause for all the good work done by him in his chairmanship and entire tenure as a committee member. Now, it's my privilege to give a brief introduction of Nagaraj Gupta sir. PV Nagaraj Gupta sir. No introduction is required. He was the past chairman during 94, 95 and a key instrumental person in construction of this building and interiors done in during his period. And he was the first person to bring national Sikasa conference in his tenure. Give him a big round of applause. And he has done a various fantastic job because as a chairman, running the branch, conducting the programs and doing the administration. Apart from that, he is actively involved in to come up this beautiful building. It shows his commitment and dedication to the profession and members and students. Really hats up to you, sir, for your service. Yeah, still we have to recognize. Anyani Gudre Halla Antare. One person cannot do everything. but we have to be part of the committee. And not only that, he has served in various capacities in various trusts. Even now he is serving as a trustee, and presently he is been serving as a co-chairman of Banking, Finance and Economic Affairs Committee of FKCCI with the able leadership of I.S. Prasad. Yeah, we cannot forget him. Yes, Ravindra also. Say Ravindra. Yes, Kore. With this brief introduction, I present before you CA PV Nagaraj Gupta sir. Welcome you, sir. Now it's a time to inaugurate this half-day seminar. I request, by lighting the lamp, I request dignitaries on the dais and request Ravindra S. Kore to join for lighting the lamp.
य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामंशो पुरुषो निर्मिमाणः निर्मिमाणः अदेव शुद्धं अदेव शुद्धं अदेवामृतमुच्चैव अस्मिन् लोकः अस्मिन् लोषधः शतः सर्वे तदूनात् सर्वितश्चनान्यकीतश्चन एतद्वैता 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 एतद्वैता
Thank you all. Now it's time to give brief introduction of our speakers. Both are gurus of majority of the CS, those are attending virtually and physically. No introduction is required still as a protocol. I'll give a brief introduction. CA Jatin Christopher sir is qualified in 1996. He is a resource person for the institute in various post-qualification programs on indirect taxation and extends support to ICA in publication of educational and research material by ICA on various indirect tax topics. He was one of the key person that 2017 when GST was implemented, the GST book law is released by the ICA. He is the one of the person to come out that GST law book so beautifully and well received by the members, and he presented papers on various national and international programs, presented papers. He has been practiced since 2000 as a partner in JCSS, a full service firm with presence across India. With this brief introduction, I present before you CA Jatin Christopher, sir. Welcome you, sir. We have another eminent speaker, CA Rajesh Kumar, sir. He is from BCom, LLB, FCA, DISA, practicing chartered accountant. He is also a well-known speaker, presented papers in various national and international forums, and assisted branch to conduct various certification programs, even assisted in training, giving training to our students in indirect taxes. He is in practicing the field of indirect tax since 2 decades, conceptualizing the intricacies of business and law and advising clients on compliances, tax planning and representation to government and other authorities. Up to March 2020 was one of the senior partner in Hiraginge and Associates, represented different clients before various statutory authorities including customs, excise, service tax, appellate tribunal, settlement commission, anti-profiteering authority, and so many various other forums. He has contributed substantially for compilation and revision of study material on indirect taxes published by ICA for CA final students. He has also contributed for background material on GST and UAE VAT published by ICA. Written many articles on central excise, service tax, VAT and GST for various professional journals. With this brief introduction, I present before you CA Rajesh Kumar TR. Now, it's a time to listen to our chief guest talk. I request CA PV Nagaraj Gupta sir to address the gathering.
My chairman, Shri B.T. Shetty sir, vice chairman and incoming chairman, Mr. Srinivasa, the dignitaries and the expert speakers for today's program, Jatin Christopher sir, Mr. Rajesh Kumar sir, Ravindra Kore, in fact, I have to specially mention him because I am working under him as a co-chairman. In FKCCA, a small opportunity has been given by Prasad, and I work with him this year. And the fellow members here, and the delegates, and those who are virtually forming part of this program to deliberate on today's subject of indirect taxation with reference to the budget proposals. In fact, at the outset, let me wholeheartedly thank our chairman, B.T. Shetty sir, without whose thought process I would never have been here before you. I deem this as a really, if I say this, probably pardon me if I say this, don't want to get into detail, but it is after 27 years I'm feeling it like homecoming when I'm coming to the institute, that too sharing the dais with the most important people and very distinguished and very capable chairman of the branch, Mr. B.T. Shetty. In fact, when he invited me to be the guest for today's function, I felt that, so let me grab it. In fact, it was true that let me grab it. So this is actually the reason. The reason is founded on basically for one or two reasons. Like I am very passionate about the CA profession, about its fraternity, and more particularly the students of this CA course. So, saying so, and now, as this is the last program, and the incoming chairman, Mr. Srinivasa, is going to take over shortly, I have had occasion to very closely look at the Bangalore branch newsletter every year, and particularly under the chairman's communic column. In fact, tremendous work has been done by BT Shetty during these 12 months of period. What may come, whether COVID or no COVID or whatever, the members, students, the fraternity has always been given maximum importance, not only in the imparting of the knowledge, not only in the imparting of, not only in delivering the services to them, and also taking the image of the branch always to a next higher level. And this has been done by all the successive chairmen from many years, I know. And even from those years of starting also, I have to say that those years we had a small place in JC Road. It was a very old building. In that we used to work. My 4-5 years of my committee membership went on in that building only. In the 6th year, of course, you all know it is definitely very pertinent to mention. It is because of the vision and dream of Mr. B.P. Rao that we are having this building. No doubt, the 6 years term, the managing committee, from the start of getting the site to the inauguration of the building, 6 years was the committee, more or less the same committee members, 1 or 2 members as usual will change in the next course. That's all. But these 8 members, I'm sorry, these 6 members. These 6 members have attended more than 65 meetings in that time. And it is all because of the dynamic leadership of Mr. B.P. Rao. So it is needless to say, but everybody has contributed in those years. So when I took over on 23rd January 1994, just 3 months before we have inaugurated this building, and 3 months after later to that I have taken over, it was every place in the building, I'm telling you, practically every place in the building was vacant. I took over as the chairman, and from then onwards, with the support of the senior members of the profession, with the support of the managing committee, with everybody, all things said and done, in 6 months, by the end of June, many facilities, including what we see the podium here in Narayanan Auditorium, and of course that time furniture, now lot of changes have taken place. I cannot say that this is all that time, never. But everything, whatever required, from admin block to chairman's room to board room to computer hall to then library, everything has been done in 6 to 8 months time. And really, I felt so overwhelmingly happy to get associated with that. It was a challenge thrown to me, not because that I have taken it up. It was because of that I was the chairman at that time. Even any other chairman would have done the same thing, was even better than me. I do not know. But definitely, that was the time that I took over as the chairman. And in addition to this, giving popularization of course was a major thrust area that I have taken up. In fact, if you will agree with me, and as my mind says even now, the best branch award for the 3rd year in succession, that is because first year, Mr. Gautam Prakash Kariwal was the chairman, we got the land from Virappa Moili. That was urban land minister was George. We all went more than 6 times. So we got the land. Then later, 2nd year, the inauguration of the building took place. Then M.R. Krishnamurthy was the chairman. So we got the Best Branch Award. Then what is 3rd year? 3rd year is nothing. But because of the activities of this, in this branch, many friends are here. They are all can acknowledge. You can see many people might be seeing it in virtually also. 9 months, they have cooperated like anything. They supported, the taken support is mainly taken from Mohandas Pai, Naginchan Kincha, and the past chairman of that time. And all these people, they have wonderfully given me every time, whenever I used to sleep at 1 o'clock, after the last call from security staff, Mr. Prem. Prem was the security staff. 1 o'clock I used to sleep and 6 o'clock I used to wake up. And every day, 1 hour, I used to talk to our then president, Mr. B.P. Rao. And 30 minutes I used to talk with Nityananda. This was my routine those days. Because I wanted to work very democratically. I don't want to take any decision singularly. So, and then the committees. So it went on so much. I never know before, getting to the seat of the chairman, I was nothing. I felt like I was nothing. But once I sat in this IC, in this beautiful palatial building, and with the ICA, that is the back up to me, I never know that I got so much of, in power and that Shakti, what you call. And then we started up doing it, and we made it, everything should happen. And many dignitaries, for example, many senior ministers, both central level and state level, they visited our branch. Even today, we have the testimonials of those people were writing in our diary moments book. See, like this, and some innovative programs, like analysis of budget, union budget. Mr. Mohandas Pai and Payam Chinka, I requested them. They said, okay. Then in the open meeting in the town hall, this was started. At that time, I requested these two eminent people who are good friends of mine, because I traveled with them a lot, many places, including Hyderabad, Chennai, Bombay, and even Delhi also. So I had occasion to go through with them because they were very close friends. They immediately they agreed, and after that, for my surprise, for my wonder, they announced in the open meeting that so long as this program continues to be held by the branch, we are going to be the moderators. And even today, those two great people are the moderators. Mohandas Pai, see, actually, I feel like, saying it about Mohandas Pai at this time. In the background of the work done by we chairman, any chairman, in the background of the work done by we chairman, there are always the people who supported us in doing things. It is because of them that the chairman could do lots of wonderful works. So in this context, I just want to quote Mr. Mohandas Pai, one simple incident. His father died. He was staying in Seshadripuram. I had announced in January the program of 50 Saturday updates. And we charge some 3,000 to 4,000 rupees. I don't exactly know. For entire 50 Saturday updates of 4 hours each, every Saturday happening in this place with 250 to 350 members, all 4 modules, direct taxes, indirect taxes, financial services, and auditing and company law. These 4 Saturdays, 4 Saturdays, 4 modules. And one of the modules, Mr. Mohandas Pai was to speak. It was on Saturday. And Wednesday, during that week, prior to 3-4 days, his father demised. I went to his house. I told him, sir, please, I can understand the situation. So we'll keep one other speaker for this Saturday. He said, never. You do not change. Mr. Gupta, I am going to come, I am going to deliver. This is what the members at that time, they had envisioned, they had dreamed, and they have supported, and they have done all this to the institute. And many, I can say more than hundreds of those people, maybe key people, maybe around 5 or 10, And because of all these high statured members of the profession in Bangalore branch, we are delighted to express and acknowledge with gratitude that their serving to the professional members made our members of this Bangalore branch today come up to this height of the achievements. And every year, successive chairman have put in lot of efforts, maybe in terms of infrastructure development, maybe in terms of other activities, conducting various innovative programs, and taking the institute to the portals to the portals of the colleges and universities, and making all these things lot of amount of energy, lot of amount of power, in hidden power, lot of amount of dedication of the committee members is required. And it is always gratifying to note that many committee members who entered the profession, many committee members who entered the profession, who entered into the managing committee, they have once in a time, they have become chairman, and most of them are now past chairman, and they have all done their work. And on this occasion, since I am there as a past chairman, I feel that the privilege to express on behalf of all the past chairmen. I really take this opportunity to thank and express my gratitude on behalf of all the past chairmen, every past chairman who has done the work for the betterment of this branch and its activities. So now, coming to close my address to you, I'm not taking through the subject because I really don't know anything about indirect taxes, but the love and affection that our chairmen sir had with me, for me, like for example, 1 to 2 months. So somehow the date was, he wanted to invite me. So he felt like inviting me for today. And I'm here before you. Once again, at the end, I congratulate the incoming chairman, Mr. Srinivasa, and his team members to do and to continue the good work of our present chairman, Sri B.T. Shetty. So again, friends, members, students, I'm really enjoying these 10 minutes of my moments here. I'm really very happy. I'm really very happy. I won't need one more opportunity to say it because of I'm already 69 now. My age do not permit to, come back again and again, and there is no occasion because I am not a learned person. I am not any distinguished speaker, but this is one and the only distinguished occasion for me that this has been possible only by our chairman. That's why again I am mentioning the name of our chairman B.T. Shetty. Thank you one and all.
Thank you, sir. By your speech, you can make out the insights of the struggle and efforts involved to construct this building. Really hats up to you. Give me a big round of applause once again. Thank you, sir. Now it's a time to propose a vote of thanks for this inaugural. I request chairman and dignitaries on the dais and past chairman Kore to felicitate our past chairman Nagaraj Gupta sir.
Friends, as I mentioned, this is the last meeting of this current term. So we had a fantastic term along with my committee members. As a small token of appreciation and gratitude, I would like to present a memento to our immediate past chairman, CA Ravindra S. Kore. I request Ravindra S. Kore to come forward and accept the memento from the chief guest. Friends, Ravindra Kore was the backbone of this term, and he did a fantastic job during his term. Bangalore branch also got the best branch award from All India level. Please give him a big round of applause. As a secretary and vice chairman of the branch since last 2 years and treasurer in the first year, since last 3 years, our Srinivas T did a fantastic job, exemplary service to the branch, and I request CA Jatin Christopher to present a memento to Srinivas T. Please give him a big round of applause. He is going to take over as chairman. Definitely he will take the flag much higher in the coming years. All the very best, Srinivas. Friends, now I request over to the eminent speakers, Jatin Christopher.
Good evening, friends. I'm indeed grateful to Chairman for inviting me to come and share some thoughts about the proposals in the Finance Bill 2022. But before that, certainly, I recollect 94, 95 in a very special way, because I remember the year when we transitioned from the old building to this building, and to know that Gupta sir was instrumental. Although he's very self-effacing, not taking any credit for all the hard work put in, but like Mr. Srinivas was saying, when you see wonderful results, you can be sure that there's someone behind it, and he doesn't even want to take credit for it. That's truly humbling for all, a wonderful example for all of us to follow. And as I see youngsters here, this is the example that seniors have shown for all of us to follow. And in this time and age where if I take a nice photo of myself, I want to show it to the whole world. Here are people who have done phenomenal work, and they don't even want to take one bit of credit for it. That's truly a wonderful example. Thank you, sir. Thank you so much. Speaking about the proposals in the budget relating to GST, let me start by bringing this point. Whenever a budget proposal is tabled in Parliament, we understand that how bills have to be read in the lower house, then in the upper house, and passed after debate, sent to the president for presidential assent, and thereafter get notified for it to take effect. We also need to bear in mind, with respect to each legislation, what is the date from when these budgetary proposals become effective? Speaking about amendments proposed in the Central GST Act, I want to start by saying GST, as you all understand, is a twin tax. There is a central GST and a state GST. Nothing in the central GST can be out of harmony with the provisions in the state GST law. So therefore, for any provision of the central GST law to be amended and implemented, it is not possible unless the state GST law also has been amended correspondingly, because this is a twin tax. You cannot have one wheel go ahead and the other one not work in sync with the other. So look at it from this point of view. Whenever we read GST amendments, we will need to constantly keep in mind what happened to the state GST amendments corresponding to the ones that we are seeing here. So please keep that in mind. If that is true, then these proposals are not yet going to get implemented from tomorrow or from April 1st. We will have to wait for these proposals to actually go through the lawmaking process, both at the center and correspondingly at the state. And it's not just center and Karnataka state, it is all the states. All the states have to amend their laws. Therefore, for any amendment in the central law to actually become effective in India, the last of the states you have to keep an eye on. The last of the states who make the amendment, only then can any provision get notified. So therefore, the sense of urgency is greatly diminished when you look at the budgetary proposals, and that explains perhaps even the turnout also. Secondly, when you look at these amendments, please bear in mind, it also shows a direction in which the government is taking GST forward. When you see some provisions, it will stand out as to in what direction the government wants to move ahead with GST. In the last 4.5 years, we have seen number of amendments, and GST has been touted as a very complex legislation. It's too difficult to understand. And if there are young students who are considering a career in GST, certainly I want to tell you that it's not as complicated as someone makes it out to be, because all of you have enormous potential. I remember in 96, where indirect tax was introduced for the first time in CA final, there were no RTPs, there were no previous year papers, there was no examples to look at and understand. But I remember that when that first year when indirect tax was introduced, there was a lot of excitement among our peers to look at indirect tax as a career option. And over the last 25 odd years, we've seen that indirect tax has come to occupy a very significant place in as an option in careers for chartered accountants to look at whether in industry or in practice. The reason why GST is what it is because we will need to recognize the framework on which GST is laid. Central law, state law, both will operate in tandem with each other. We also have the integrated GST law, which does not have a corresponding state law. It is one common across the country. And amendments, therefore, to the integrated GST law, once it is notified, can get, after it's enacted and notified, it will straight away come into effect without waiting for any state amendment. It is not complex when you read it the first time, when you read it afresh and look at it from a fresh perspective. It is complex when you compare it with the earlier tax regime. It becomes very complicated because, like Chairman sir, I think in our previous seminar was saying, we have to unlearn certain things because our mind is tuned to look at certain provisions in certain manner. And we find that something is very jarring as far as GST is concerned because it goes completely in a different direction compared to what we have been used to. In fact, a lot of senior members have made specific mention of this, that we will need to let go of our preconceived notions about how GST should be based on our past experience. No one in GST in that sense is an expert in this law. We all have the same amount of experience, 4.5 years of experience. There's no one here who has 20 years of experience in GST. So in that sense, this is a great leveler. It has brought tax officers to a classroom. It has brought senior members to a classroom. It has got, and the same room is shared by newly qualified chartered accountants and students to understand and get a grip with how this law is. The reason why I mention this is we will need to look at the amendments proposed very dispassionately, not judging whether it's a good provision or a bad provision. When we start evaluating and giving opinion about what the provision contains, then we will do disservice to the very provision itself. So today we will focus on those provisions in the finance bill to understand what are they trying to say, to recognize to what extent it will have a bearing once in the event it is actually enacted and notified. So we'll make a simulation of sorts to see if this amendment were to also be made in the state law and it is actually getting implemented, what effect it will have when we look at those provisions. We'll start by looking at the amendments proposed in section 16. The background to section 16 is that it contains the conditions, 16.2 specifically, it contains the conditions for claiming input tax credit. As you know, there's a lot of discussion whether input tax credit is a right or it's a concession that is allowed in the law. There are judgments explaining what is a right and what is a concession. But when we look at GST, please bear in mind, input tax credit is output tax prepaid. Input tax credit is essentially output tax prepaid. Why is it, therefore, why is the debate around whether it's a right or a concession is because we look at so many conditions attached to it. About this, I'd like to share that whenever we have a right, wherever there is a right, the right does not originate without a specific point in time. The right is what is called inchoate, that is in formation, and once those preconditions are satisfied, it becomes a vested right, it becomes perfected. So therefore in GST we see there are vesting conditions. If all these conditions are fulfilled, then it becomes a right. So a vesting condition which is not fulfilled becomes a divesting condition. You don't have that right because the condition necessary for vesting of those rights has not been satisfied. So vesting conditions behave like divesting conditions. For the benefit of students, let me just mention, when we look at the subject that is like GST, please consider that GST is not an island, something that operates in isolation. GST is standing on the shoulders of legislations like Transfer of Property Act 1882 or Contract Act of 1872. So legislations that are as old as 1872 feed our understanding about GST. So youngsters, please don't prejudge this law saying it's good, it's bad, but look at what it is and look at the basis on which it is standing so tall. So when you look at conditions, there are vesting conditions, and if vesting conditions are not fulfilled, it becomes divesting condition. One of the conditions that has been introduced in section 16.2 is that the credit that someone seeks to take, it should not be affected by restrictions placed under the new section 38 in this, which is proposed in this finance bill. There are a number of conditions which has to be passed in order for me to be eligible to take this credit. For example, all the goods and the services must be received if I want to take the credit. If I receive an invoice, but the goods are still in transit, I may have the invoice with me, but the credit cannot be taken until the last batch of the consignment is delivered. So that's one of the conditions. Another condition we can see is you must have a copy of the invoice with you that shows what is the amount of tax you have paid. So these may be simple conditions, but to these conditions, another condition has been imposed. That is, there should not be any restriction that is super added by the new section 38. So even if you have fulfilled all the other conditions, if there is a restriction flowing from section 38, then what is otherwise eligible will now not be eligible. So to look at what is the condition, please consider when there are many conditions, does it mean that if we satisfy one condition, I will become eligible? No, it is cumulative. The last of the conditions also should be fulfilled. And if the last condition does not get fulfilled, it doesn't matter that the earlier conditions have been fulfilled, credit will no longer be available. Corresponding to this new 16.2 BA that has been introduced, we need to contrast that with two other provisions. One is section 41 and the other one is section 38, the new section 38 that is introduced. Why do we have to go to 41 and then go to 38 is because previously or currently the section 41 that is in the statute book says that whatever you claim as credit is allowed to you provisionally, so that tomorrow when you can show that all these vesting conditions have been fulfilled, that provisional becomes final. So there is a certain direction in which section 41 points us in saying, take what you want as credit, it is provisional. Only when you have shown tomorrow that all the conditions have been satisfied, will what is provisionally taken be final. This gives us an understanding. For students' interest also, I can point out that this gives us a clue that there are some preconditions and some post conditions. Preconditions must be fulfilled in order to take the credit. Post conditions must be fulfilled after you have taken. So if the post condition is not fulfilled, then what you have taken can be taken back. So look at it from that perspective, so you'll get an idea. So section 41, which contains this concept of provisional credit, has been substituted with a new provision in section 41 to say that whatever you are eligible to avail as credit, that will be allowed as a self-assessed credit. Friends, please bear in mind, the most powerful section in GST law, if you ask me to point out, I would invite you to please consider section 59. It's a very simple section, only one provision here. Every registered person shall self-assess the taxes payable under this act. Who is the assessing officer in GST? The taxpayer is the assessing officer. There is no officer who has the authority in law without violating section 59 to call for your books and records, stating that please bring everything, I want to do your assessment. We are required to ask that officer, what is the section that gives you this power to do this? Recently there was an officer's training of the GST department where we told them that you don't have any power to call for books and records in a routine manner to check if the assessment conducted by the taxpayer is correct. They were very agitated that, as a tax officer, if you say I can't call for books and records, then what can I do? There are many other things that you need to do because this is a new law. What we have been used to doing in the past, even tax officers need to let go of and not continue that. So then what is it that I need to do? Whatever the taxpayer has done, that is the assessment. Whatever the taxpayer has done, that is the assessment. Now, what if it is wrong? If it is wrong, then you have to first establish that it is wrong by doing investigation through a particular section, or audit under a different section, or scrutinize the returns filed under yet another section. Then substantiate your interpretation with a show cause notice. There is no such thing that somebody will walk in, revise what you have done, make a demand, recover tax and go away. Those days are gone. Today, taxpayer is standing up and asking the tax officer, which section? Under which section are you conducting this action? Tax officers are completely in confusion when someone puts this question. If you ask an officer, under which section are you doing this? Recently, there was one instance where someone asked an officer, what is the investigation that you are proposing to conduct? Under which section of law do you have this authority? So his response was, I'm a tax officer. If I ask you to bring documents, you're supposed to bring documents. See, he also needs to unlearn, because those days are gone where he can simply exert his designation. But as chartered accountants, what we need to recognize is anything that appears on a official stationery, we don't need to start trembling. We will need to also know under which section this is operating, for the reason that if it is under a particular section, that section tells us what is the action that is required of us. If it is a different section, then the action that is required of us is also different. So there can't be one fits all. It has to be based on the question, and the question has to be traced to a particular provision of law. So therefore, section 16(2)(ba) says, if it is not restricted under 38, then only the credit becomes vested. 41 currently says that whatever you take as credit is provisional until I will come forward and raise questions. But if you see 41 that is proposed now, it says what you are eligible for will be allowed as self-assessed credit. That means I have done an assessment. You understand the difference between what will be my liability if I have provisionally taken credit versus what I have finally taken credit. If I have provisionally taken credit, it means that the answer can go either way. So therefore, my accountability is greatly diminished. But if it is not provisional, it is obviously final, then my accountability is much more. I'll give 2 examples to highlight this aspect. There is a Orissa High Court judgment in the case of safari retreats, which says that when you are constructing a building for your own occupation, you are not eligible for input tax credit. But if you are constructing a building for letting out, then you are entitled to input tax credit. The restriction placed under section 17(5)(c) or D will not affect the claim of credit. The whole country is going in a different direction and Orissa High Court is going in a different direction. So there are some taxpayers who say, I will rely on Orissa High Court decision even in Karnataka and I will take the ITC. Remember 41 that currently exists, it says whatever you take is provisional. Remember, being stupid is not wrong. You understand the difference? Being wrong is punishable. Someone who reaches an interpretation that is incorrect, as long as that interpretation is not impossible, that becomes bona fide. So I can entertain a bona fide view. Bona fide view is not my strange way of looking at the law, but my view agreeing with Orissa High Court's view. Karnataka High Court has not said anything about it, but Orissa High Court agrees with my view. So therefore, why is my view not possible? It is bona fide, it is provisional, therefore I am not accountable. There can be no consequence of any penalty arising if I entertain such a view. So look at it from that point of view. Today what is happening? In the amendment proposed to section 41, the entire section 41 is being substituted. The new 41 that is proposed would say, you are responsible for the decision you make about your credit. You are not tentatively taking the credit. You are not provisionally taking the credit. Your credit is final as self-assessed in the past tense. What you have completed assessment. So you make a decision whether you are eligible for credit. If you are doubtful, again you make a decision that you want to take that credit and the consequences that go along with it, or you make a decision that you don't want to take the credit. In case Orissa High Court judgment gets upheld by Supreme Court, you would have lost it. So a huge responsibility sits on the taxpayer's shoulders that he has only one chance to make a decision. He cannot, there is no second attempt. There is no revision, another chance. It's not possible. So therefore, the consequences of interest and penalty, interest of course is automatic, penalty will befall the taxpayer for making these decisions. Very interestingly, 41 contains 41(2) and a proviso. I will come to this when I come back to section 41, but understand what these 2 sections will do as far as 16(2)(ba) is concerned. So section 16(2)(ba) that has been introduced is a condition upon a condition. We had 7 conditions in 16(2). Now we have, from this January, 8th was introduced in 16(2)(aa). Now the 9th is being introduced, 16(2)(ba). In this provision, it makes all the effort that you have put in subject to 38. So therefore, condition to a condition. That is how severe this has become. Now, if you step back from this provision and see if this is how amendments are being proposed, what is the direction in which GST is headed, you will see that credits is like a blank check that is available to the taxpayer, and government is going to keep a very close watch on this. As an accountant, what is the learning that I have is, I have to monitor all my suppliers. I have to create a tax compliant ecosystem so that I don't have a single supplier who is a defaulter. If he does not discharge tax, then he will result in me becoming ineligible for credit, although all other conditions I have satisfied. So this is something to keep in mind. Whether you think this is excessive interference by the law in the running of a business which is supposed to be self-assessed, or it is adequate amount of interference, that's a matter of opinion. But if you see the direction the government is giving very clearly shows that it is determined. Here is a determined government to go through with monitoring and regulating and supervising the controls that are there as far as allowing credit. What this does as far as the accounting function in the organization is that we will have to make sure that all our suppliers, we don't work with suppliers who are defaulters. We make sure that there are systems in place to identify whether all our suppliers are compliant, they have filed their returns, they have discharged their taxes. That flows through the system for me to look at and see whether they have complied. Then only I will be able to take credit. So if you identify that the level of controls being introduced, now visualize what is the industry control environment in different sectors in the industry. Different sectors. There could be software, there could be software services, there could be real estate, there could be government construction contractors, there could be hospitality, travel, variety, professional services. Do all of them operate in a uniform environment of compliance? It's not, it doesn't exist. It is very heterogeneous. But the minimum standard that GST now expects is not only should the taxpayer be compliant, but the taxpayers' suppliers also should be compliant. This gives me an indication that the tax collection through reverse charge mechanism is likely to see a spike. Wherever the compliance level is very limited, those taxes will fall on reverse charge. I'll give you two examples. Goods transport agencies, there was a challenge to make them comply with service tax payments. Lagu Udyog Bharati was a decision, matter went to Supreme Court, had to be struck down, was struck down, subsequently amendments were made to restore the levy. But then the government identified reverse charge as the mechanism where instead of the supplier paying the tax, the recipient will now need to pay this tax. So by introducing reverse charge, the situation that existed in that sector was addressed. Another example we can think of as recently in GST is where in real estate sector, developers are registered, they're able to comply with the regulatory requirements, but the landowners with whom they have agreements for development of the land, those landowners were not organized enough to become compliant because perhaps there were too many people who hold one parcel of land, or they don't have too many land parcels, so they do this transaction only once and thereafter they come out of this requirement. So GST has introduced reverse charge liability as far as this sector is concerned, saying wherever tax is payable by the landowner, it will now be liable for reverse charge. So therefore, please visualize. To take a cue from income tax provisions that I have no idea about to be able to say anything, you will recognize that the number of provisions introducing TDS and TCS has been steadily growing. Why? Because it creates an audit trail. We are able to appreciate best the value of audit trail. Once there is a TDS from some transaction between two PAN numbers, then it becomes easier to monitor their compliances, especially now in this digital and highly connected environment that we operate in. If you look at the way restrictions are being imposed, please bear in mind, we have to be very careful what kind of representations we make to the government. If we make too many recommendations, here is a government that I said is resolute, it is decided to go through with this, and if compliances are really a challenge, then it's easily possible for government to notify compliances in different areas on reverse charge basis. The tax that is to be paid on forward charge basis will be flipped over and will become payable on reverse charge basis. So therefore, those who are organized, their responsibility will only keep growing. We have to comply with our taxes, we have to comply with reverse charge liability for our suppliers, and those who are still on forward charge basis will have to monitor. I'm seeing this direction that with section 38, 16(2)(ba), it is possible that, it's very easily possible that if these amendments are notified, very soon we will have a spike in the number of provisions, number of transactions which fall within reverse charge. So supplier, I have to pay my taxes. I also have to pay taxes that my supplier should pay and claim credit wherever it is admissible. If we take another instance, that is another amendment that is relevant in the context of budget 22 discussions, is section 16.4. The reason why 16.4 is important, I will tell you. 16.4 basically says that if you have not taken credit on any invoice in a financial year, you are welcome to take credit of that within that financial year or any time within the next 6 months whenever you file returns. Section 16.4 presently contains a provision that says the credit should be taken before the due date for filing the returns for the month of September. So for a financial year 2010, 2020, 2021, credit should be taken before you file the returns for September 2021. So let's say an invoice is dated April 2020. I can take the credit in April, May, June, July, all the way up to March, or I can take that credit next year, April, all the way up to September. The amendment proposed here says it will not be the due date of filing the return for the month of September following, but it will be 30th day of November. The reason why this provision is so significant in my view is because for 2020-2021, there is a due date to file returns. I can delay and file the returns on payment of late fee. When I pay late fee, is the return valid return or invalid return? It is still a valid return. What is the use of paying late fee if my return is regarded as invalid? So on payment of late fee, a belated return becomes a valid return. So let's say 2021 is the financial year, March 21 return. When should I file it? March 21 return, when should I file it? I can file March 21 return whenever I want to file it. Whenever I file it, it will be a return of which month? March 21. Suppose I file this return in December 21, does it become a December 21 return? No, with late fee, March 21 return filed in December 21 will remain a March 21 return. What does section 16.4 currently say? It says input tax credit should be claimed in the returns not before the due date for September. So as long as I have filed it in March return, whenever I file March return, I was eligible for credit. Today, by specifying 30th November as a fixed date, March return also has to be filed before 30th November. September return also has to be filed before 30th November. October return. So if you look at it from that point of view, I feel a very significant shift has been made, where the last date was dynamic, linked to when you actually filed returns. The last date now has become static. So therefore, this is another indication that government not only wants to monitor the returns, the credits through section 38, but government also wants to specify an expiry date for all the invoices. I am eligible for credit in April 21. Do I have to take it in April 21 only? Today it is headed in that direction because every month's credit should match with 2B. Next, if I take this credit in the following month, there is no challenge. But because GST does not seem to recognize set on and set off, we understand what is set on and set off, right? We carry forward what I was eligible for April and claim it in the month of May. April, I was eligible for 1 crore credit. I have claimed 90 lakhs. May, I was eligible for 0 credit. Can I still claim 10 lakhs credit? Of course I can claim. But if you see, 2B will not match. 2B says 0 and I'm trying to claim 10 lakhs credit. So it will show up as a variation. So it's almost, not only is there a expiry date being specified for all invoices, and we are compelled to take credit in the earliest month possible. This is where we have to recognize whether the practical realities of business, it is possible to take credit in the earliest month. One example could be goods in transit. I have an invoice dated 30th April. The goods are delivered on 5th of May. should I take the credit in May or April? Obviously, receiving the goods is a vesting condition, so I have to take the credit in the May's return when I'm filing in June. But in the month of May, the supplier does not have any invoice uploaded showing this tax. In April, it is appearing, but I could not take the credit. So there are real life instances where there will be what we as accountants call timing differences, where it does not seem to be accommodated in these provisions. So 16.4 therefore is very profound in terms of specifying a hard close. 30th November is the last date. You want to delay your returns, you can delay as much as you want. Now when you say 30th, is it October return before 30th or September return before 30th of November? Here is a very clear hard close date that is being specified, that November 30th becomes the last date for claiming any credit. So that's a very significant move of the government. Now from a government's revenue point of view, what will happen? Why it is important is because that is how notices will follow. I am eligible for 100 crores credit. 1st of December has arrived. Immediately government can reverse all these credits that are accrued but not claimed. You understand, right? What is accrued but not claimed? It is accrued. I haven't yet claimed. I could have claimed it whenever. November 30th has crossed. So all that becomes government revenue. So therefore, I am seeing that this can be very significant from a government revenue point of view, that attention will be paid to invoices whose dates cross, whose dates for a particular financial year are not included in the claim for beyond 30th of November. Reading this in the light of section 38, we will see that 38 specifies an auto-generated statement. The system will generate a statement to say, even though it contains credits that I'm eligible for, many of those may not be available for me to claim. You understand the difference between eligible but not available? I am eligible to take credit. It is not a blocked credit, but the credit is eligible. Unless I have passed the hurdle set in section 38, it is no longer available for me to take it. So when we have this accrued but not yet due situation, we can have 16.4 come in the way to make me forego that credit. So not only should I keep November 30th in mind when I'm looking at credits, but I have November 30th as the last date to follow up with all my suppliers to make sure they rectify their returns so that everything reflects appropriately. This is not an exercise that one can think of doing in the month of September and October. This is an exercise that I believe needs to be done throughout the year. You can't wait any longer. So our own accounts will perhaps start including credits like credit accrued but not due. Monitor that. Once it becomes due, after all the compliances are met, I have to take back the credit. Imagine the challenge as far as keeping control accounts and monitoring. I have made a purchase. I have not inventorized the GST portion, but I haven't yet included in my returns to claim that as credit. I have to keep it in one interim account to monitor if that credit is actually complying with the requirements of section 38. So this indicates to me that credits are not only, it's one thing to say that the law has some consequences if you claim credit that is not admissible. It is another thing to say that the government will supervise the credit that you are claiming. I'll go over that again. If you're eligible for credit, if you don't take it in accordance with the provisions, there will be a penalty. So here still the taxpayer is responsible for self-regulating. But here, so far we had self-regulation. Today we see provisions being proposed which go beyond self-regulation. Government is now going to get involved to see what is your eligible credit, and that will pass through the filter of an auto-generated statement to show how much of that you can actually claim. If you're eligible, but it is restricted because of these provisions, then even that can vanish once 30th November arrives. So please consider that credits become so significant once these amendments are passed. If you look at businesses itself, businesses have very low profitability. Businesses don't have profitability comparable to the GST rates. GST rates are far higher than the actual profitability in a business. So a business decision taken can go completely south if we lose the ITC. So therefore, claiming ITC, making sure that the credits are compliant, becomes eligible for us to take it, and within the time limit of expiry specified, we have actually taken the credit, that gives us a good idea as to the amount of emphasis input tax credit is going to get. From youngsters' point of view, to look at what is it that I can do here is to develop your expertise in control accounts, monitoring credits, looking at AP, looking at what action can be taken, how do you find out, right, from PO process to accounts payable to payment of all creditors, monitoring credit to identify whether input tax credits have been secured as far as the company is concerned. Another amendment that we need to look at is the time provided in section 34. Section 34 provides time for, the supplier to issue debit notes and credit notes. Supplier is given a time limit to claim debit notes, circumstances when credit notes and debit notes can be issued, and the time by when they need to be issued. When you look at the time limit available for issuing credit notes, similar to 16.4, it used to say that before the due date for filing the returns for the month of September following the financial year. Today, that also is being changed to say 30th of November. In other words, for financial year 21-22, credit notes have to be issued before 30th November 22. For financial year 21-22, where sales have been made, services have been provided, invoices have been issued. If you want to issue credit notes must get issued before 30th of November 22. Now, if you look at the normal course of business, credit notes are not necessarily issued with a short interval of time. Sales returns can take any amount of time to come back. All right. Say distributors discover that after 2 years the goods have not moved, so he decides that it is nearing expiration, so I'm going to send it back to the manufacturer. Take medicines, for example. He decides to send it back. Traditionally, credit notes have been issued. Today, because of this date of November 30th, the distributor will send the goods back with an invoice and not a credit note. You understand? So therefore, credit notes are going to be so closely monitored is the clue that I'm getting. I issued an invoice, it turned out to be wrong. What is the accounting entry to be passed? I have to reverse that by issuing a credit note. We look at it from an accounting point of view, but GST expects us to look at it from a legal point of view. Is it possible for services to be returned? I gave tax consultancy, customer says, I don't want your tax consultancy, and he will give me tax consultancy back. It is not possible. If I have provided a service and I have issued an invoice, what is invoice? We know revenue recognition. Invoice is issued only after I am satisfied that my customer has an accepted obligation to make payment. That's when I will recognize this. Having issued an invoice, I would think 9 out of 10 cases, credit notes will come in for challenge. How could you issue an invoice and then say there was something wrong with the invoice and you have to revise it? Please be extremely circumspect. If you find a credit note, 90% possibility that that is the weakest area that will be concentrated upon the most. Now, credit notes also are given the same time limit of 30th of November. Is it possible for us to have a billing team or an AR system where credit notes are monitored with a time limit? Credit notes are based on the terms of the contract. I have issued an invoice, you haven't approved the invoice. Take an example of a contractor, not a real estate developer, a contractor. He has carried out some work, issued a claim to the customer. The customer gives it to an independent engineer who will validate the invoice, measure the work, and certify before it goes for payment. If an invoice has gone for certification, I have issued an invoice for 10 crores. He has certified 9 crores worth of work. What happened to that 1 crore? Is it bad debts? Should I issue a credit note for 1 crore? 10 crores of work has been done. I have issued a statement for certification of work done. 9 crores of work has been certified. What happens to that 1 crore? If the statement that I sent is issued as a tax invoice, then that 1 crore has to be a credit note. But in the normal course, those who recognize this business will tell you that 1 crore of work is not certified for this month's bill. That 1 crore is WIP, work not certified, to be included in the next month's claim, so that that portion of the work, when it is complete according to the contract, that is when it will be approved for payment. So look at it from this point of view. Tax invoices, credit notes, or return invoices will assume a lot of significance as we go forward. So this becomes a significant area. GST seems to be getting into accounting. GST has already got into it as far as what checks and balances need to be put in place. Today, GST is now going to tell us 30th November, credit notes. After 30th November, invoice from your customer. Imagine how complex it will be if you have to tell BHEL to give you an invoice. When BHEL has given you the purchase order, you have sent something and they need to now give you an invoice because November 30th is crossed. BHEL will now need to rewire its thinking to start issuing invoices when there are purchase returns being effected from their side. Ind AS anyway recognizes how this needs to be treated. It will be reduced from sales and it will not be added to purchases, or it will be reduced from purchases for BHEL and not increase the sale value. So therefore, what is in sales account in the P&L account is not necessarily your turnover for GST purposes. What is in sales account in your financials is not necessarily the turnover for GST purposes. GST very simply goes on the basis of your invoices. Next, when you look at filing GSTR1 filing, we've all understood how it works. It's the importance is increasing year by year. If you see section 37, an amendment is proposed that GSTR1 will be filed in section 37 and it shall be filed electronically. Now there is a provision that is to be introduced to say filed electronically subject to such conditions and restrictions. So today, when you're writing something, someone's going to be holding your hand as you write it. Someone's going to be holding your hand as you write it, because subject to conditions and restrictions as may be prescribed means the word prescribed is defined, I think 276 or 78, it says as notified in the rules. So there are going to be so many more rules that will be introduced once this bill is passed to prescribe the conditions and restrictions as to how you will need to file GSTR1 returns also. So that I think is a significant amendment that is being proposed. As far as making amendments, if you see in 37.3, an amendment is being proposed to say that you're going to make an amendment. 37.3 says you're allowed to make amendments to the data that is already reported in GSTR1. Now these amendments have two aspects to it. One is how you will make the amendments. Second is by when will you make those amendments. By when will you make those amendments is now fixed with 30th of November. But how will you make those amendments? Subject to conditions and restrictions as may be prescribed. Here I have a concern in terms of when something is delegated. When something is delegated, the delegation should be with limits, boundaries, guidance, instruction. You can do this, but not beyond this. The way you will do this, the manner will be specified, the time limits. If you see here, subject to conditions and restrictions only means that the government, see, Parliament makes the law, government makes the rules. So the government is given a free hand. Any condition it can impose, any restriction it can impose. Condition is before. Someone pointed this out to me. I like this distinction. Condition, what is imposed before. Restriction is what is imposed after. So there is no boundary, there is no limit, there is no saying what exactly they can or cannot do. So it seems to me that the way in which you will make amendments to GSTR1 is also hit with these conditions and restrictions that are to be prescribed when the rules get notified. So therefore, what you will file in your returns, you have to do it right. If you want to make amendments, there are conditions and restrictions that will control as far as how you will set things right. So therefore, this points us in a certain direction. The direction that it seems to be pointing us in is to show you can't go wrong too often. If you have gone wrong, Rectification is allowed in the way the rules permit it. Rectifications in the way rules permit it must be completed before 30th November. So therefore, perfection seems to be expected out of compliance. The very nature of compliance, human effort involved in compliance is there is always room for revision because of possibility of human error and other uncontrollable factors. Perfection that is being imposed is alarming to the extent that the restriction and conditions that are going to come in as far as amendments are concerned gives very little room for correction. It's like passing mark itself is 95. Passing mark itself is 95. So very little room is being allowed for. Nobody can now budget on corrections later. You do it once, you do it right, you get it right the first time. That seems to be the approach. I don't know if Delhi, Bombay, Calcutta, Chennai, Bangalore, this is India. India is not just places like this where there may be available infrastructure to match up with this. All across the country, the expectation is like this. So therefore, it makes me wonder, this is the extent to which if it is being imposed, what will happen? What will happen is, if you didn't meet the condition, that's it. You don't get to rectify. If you don't get to rectify, let's say I have reported 10 lakhs additional liability when I filed GSTR 1. Rectification of that liability, I have a small window of time till 30th of November, subject to conditions and restrictions. I have missed that. I have missed the time to make corrections within that time limit. What happens to this 10 lakhs liability? With the amendment that is already made to section 7512, that 10 lakhs will become payable. In fact, even without having to give a show cause notice, that 10 lakhs can be taken out of the bank account. So therefore, please be very careful. We have one chance to do things and we have to get it right the first time, every time. Every time we file these returns, it has to be done correctly. So look at it from that point of view, you will recognize that those amendments are very profound that is being proposed in this budget. Next, when you look at Section 38 that introduces a whole new section. A whole new section has been introduced substituting the earlier Section 38. So therefore, GSTR 2 that we had studied, we were waiting that it will get rolled out at some point where we will input some data. It is now permanently gone. There won't be a GSTR 2. Therefore, there can't be a GSTR 3 also. It is 1, 2B, 3B. 1, 2B, 3B. That is how it's headed, and that seems to be permanent because the sections that contained provision for filing GSTR 2 are being done away with. The new section 38 is very interesting because it says you are eligible for credit. You are eligible for whatever credit that appears in 2B, fine. But you are going to be provided another auto-generated statement. This auto-generated statement will tell you out of what you are eligible, how much is allowable. You may be eligible for many things, but what is now allowable, what is available for you to claim is going to be regulated through this auto-generated statement. By its very nature, auto-generated statements can have some deviations. For example, what we call timing differences. Auto-generated statements will have something. What I am not goods in transit as the same example, what I am not eligible for credit on 30th of April, the system will say it is eligible for you, please take it. But I know if I rely on the system, then I will be violating the condition for credit because I can't take that credit in April. I should have taken that credit in May. System is pushing it into this auto-generated statement. So I'm forced to take that credit in April because it will not again come back. Credit available, not availed is not going to get carried forward into the system for the next month. So I will not be eligible to take it in May if I miss it in April. So to the extent that it's something like my input tax credit eligibility, system will tell me what it is. So therefore, that's a big challenge. Secondly, there's an inherent limitation in the credit because the system does not understand what is blocked credits. For example, whether I am a contractor or not, the system will not recognize. I may have various HSN code, maybe 9954 is there, maybe 9985 is there, different HSN codes I may follow. System does not know if I'm making works contracts in my onward supplies. Inward supply of cement and steel is blocked credit for everybody, but not for a works contractor. So therefore, when a system pushes credits through section 38, when a system pushes credit, it will push all credits. Eligible and block credits will be pushed through the system. When blocked credits are pushed through the system, I have to now filter what is blocked and look at the remaining. I'll give an example of what we have seen nowadays. Notices are going around everywhere. 2A is less than 3B. 2A is less than 3B. Therefore, notices are being issued demanding the differential tax. I'll give you an instance. Someone has a 2A and 3B credit is matching. The entire 2A, whatever is the balance, is matching with 3B. But if you open up that 2A, you find that only motor vehicle purchase invoice is appearing in 2A. All the other goods and services I have purchased is absent from my 2A. So the officer says your 2A is matching with 3B, so I will not have any observations. In fact, this is the case where they need to raise an objection because your 2A contains motor vehicle, which is blocked under 17.5A. So therefore, system will do analytics, but it cannot replace the role of an officer to examine what data is coming through, whether it is sustainable to issue notices like this. So when you look at section 638, it provides 6 conditions. Now there is eligible credit that is now being filtered into available credit or allowable credit. What is allowable? If you see, please visualize in your mind how the purchase process will take place. A has supplied to B. A has supplied to B. B wants to claim ITC. B is going to be given an auto-generated statement showing how much credit he can claim. I'll explain those 6 clauses. It's very interesting to see how far ahead someone has thought to be able to design this auto-generated statement. B wants to claim credit. B has purchased from A. The first condition is A should have filed GSTR 1. A should have filed GSTR 1. And in the details that A has filed in GSTR 1, A should not have defaulted in paying tax within certain number of months from taking registration. A was liable for registration in the month of July. He has taken registration in the month of August. He has issued revised invoice in August, filed GSTR 1 in December. My credit will vanish if my supplier delays by so many months. What are so many months? That is to be specified in the rule. So the interval of time between registration and filing GSTR 1 can cause my credit to vanish. I have made a valid purchase. I have paid tax to my supplier in the month of November, but since he has taken a certain interval of time beyond the limit prescribed in the rules, I will stand to lose that credit. What am I supposed to do? If it is a one-time purchase, I will need to keep such suppliers under watch. That till it appears in my statement under section 38, I will not be eligible for credit. Next is, if my supplier has defaulted in paying tax, or his default has continued for a certain amount of time, I have made a purchase, my supply invoice he has uploaded, but he is a defaulter. He becomes a defaulter not with respect to a specific invoice. He becomes a defaulter with respect to his entire returns. Even though my invoice is valid in all respects, I have discharged the tax, because he has become a defaulter or he has remained a defaulter for a certain number of months as will be prescribed, this credit will vanish from my books. So the reason why this becomes a challenge is because I don't know which of the 6 criteria is making this credit to vanish. Now, what question will I put to my supplier? Under section 38, your invoice is disqualified. So you please go and set things right. Otherwise, I will lose this credit. AP process is now going to perhaps get split to say what extent of the basic invoice value is what I can pay. To the extent of taxes till it appears in the statement in section 38, I may not be able to discharge. I don't know if AP process can become so subjective. Today, if you see in automation, so many things are being automated, outsourced, maybe offshored. So many different agencies are being involved to process payments, that whether this is a new functionality that can be added into the system, and how soon ERP systems can be geared up to make provision for a two-step payment process instead of a one-step payment is a question that we have to wait to find out. Second, my supplier A has not paid the output tax. The output tax that he is liable to pay versus the output tax that he has paid. One is if he's a defaulter. Defaulter is someone who has not paid the output tax. The third condition is if he is liable to pay output tax of 100, but he has paid output tax of 90, then that credit may not be available for me because he has defaulted to the extent of that percentage limit that is going to be prescribed. 10% difference between output tax payable and output tax paid by supplier. If it is prescribed, then 11% gap, I will not be eligible. 9% gap, I may still be eligible. So therefore, if you see section 30, rule 36(4), if you see, first time it was introduced, it started off with 20% limit that was allowed, then it became 10, then it became 5. So we don't know, once this is being allowed for the government to prescribe, what percentage limit government will specify. Surely they are not going to prescribe 100% limit. It will be a much smaller percentage. So my suppliers, I don't know if suppliers can be evaluated beforehand. Every supplier will be evaluated before issuing any purchase order, but you don't know what he will do after he is awarded the purchase order. Every month, if he has to remain compliant, it becomes a challenge. The fourth condition is, my supplier has availed some credits. A will supply to B. X has supplied to A. Now, in the credit claimed by A of the purchases made from X, the credit claimed, if it exceeds the amount of credit that he is eligible according to this statement, then I will also become a defaulter. So you understand, this is going to create a chain reaction. So this is so powerful that let's say I am bidding for a government project. I should charge them the tax correctly. I will file my returns correctly. It will appear on their portal and they will also want to take credit. If my suppliers become defaulters, I will become a defaulter here. I may take some action against my supplier, why he has not discharged it, why is this gap more than the prescribed limit, etc. But how do I control something that my supplier does that debars me? So what will I do? I will not take any credit. To protect my business with this customer, I will not take any credit until all the issues are resolved. But is it possible under section 41 for me not to take that credit? Is it possible for me not to take that credit in this month and wait for 3 months till I go back and comply? We have to look at section 41 to understand how that's possible. But now look at the steps that are added as far as claiming credit, accounts payable, and invoicing is concerned. The steps that have now got added is, it is so esoteric that it's likely that everyone will become a defaulter in some sense or the other. It's not, because in a relay race, the outcome of the race is decided by the slowest runner. It's not the fastest one who will decide what happens to the relay team. The slowest one, where is the slowest one placed? Slowest one is the second runner or the first runner or the third runner, isn't it? In 4 people relay race, the second or the third person will be the weakest. The first one will try to give a good start, and the last person, the anchor man, will try to make up if there is any gap and finish the race. So therefore, we have to monitor the weakest. Now, how many weak players can be there in a system? It's not like all my raw material suppliers should be compliant. My stationery vendor could become non-compliant. Do I take ITC on stationery? Of course, I take ITC on stationery. My travel vendor could become a defaulter. So therefore, the ask as far as trade is concerned seems to be a high order. The fifth condition is there is a new provision that is proposed in section 49.12 as far as blocking of credits. I'll come to 49.12 in a moment. If my supplier has got his credits blocked and he has there's a limit specified and he has defaulted there, then I will also become, this credit also will not be available. So there is going to be a large basket of credits that is accrued but not due. Monitoring that with some control accounts become very significant to identify how these credits will be reviewed. And if there are certain class of persons that will be prescribed in the rules, then all those credits will become questionable. Let's say government decides that certain suppliers will be notified in the rule, prescribed in the rules that they are not eligible for credit under section 38, those credits will vanish. Now what do? I'm eligible for credit. My class of supplier himself is notified in the rules. So therefore, when I make purchases, I have to budget that that credit is not available. See, eligible credit not allowed is still going to be a cost. I can't argue that it is eligible, so I will exclude it from inventorizing it or expensing it. I will have to carry it forward as a, I will have to expense that eligible amount of credit also. The background to section 38 is to help us understand when we get to section 41, if this is the level of restriction, how do we identify how credits need to be claimed as far as 16 and 41 are concerned? Because like I mentioned earlier, 41 has taken away the concept of provisional credit. Without provisional credit, whatever is eligible, that is a self-assessed credit and it should not be hit by section 38. Before we go to 41, very quickly we'll touch upon section 39. 39 is a very significant section because it deals with filing returns in 3B. All right. But in section 39, the aspects that are specified, the due dates have been altered, moved around, 13th, 20th, etc. But the important aspects I'll quickly touch upon in the interest of time to be able to identify. When you look at section 39, 3B was proposed to be a statement until GSTR 3 was filed. With the amendment made to section rule 61.5, 3B became the return. Once you file 3B, you don't have to file 3. Today, 3B has become final. 3B itself is the return. So 1, 2B, 3B has become the form and not 1, 2 and 3. So keeping this in mind, amendments have been made in section 39. So that we will have to consider as to how this will be. The significant aspect that is still not regulated in 3B is, let us say I decide to claim 1 crore credit this month. Will 3B stop me? No. Section 38 will come and stop me. Section 38 is the via media to stop me from claiming credits that I otherwise was free to take through my returns in 3B. Keeping that in mind, we look at section 41. Like I said earlier, provisional assessment concept has been done away with to identify how will this credit at all be claimed. Today it says your self-assessed credit. The language of section 41.1, I'll quickly read so you will be able to grasp one aspect that seems to be omitted here. Every registered person shall be entitled to avail the credit of eligible input tax as self-assessed in his return, and such amount shall be credited to his electronic credit ledger. See, credit is available, it will be credited. One step seems to be missing. It is available, it should be availed, then only it will be credited to my ledger. If it is available, but I have omitted to avail it, that is why we have section 16.4 specifying 30th November as the date. It is available. Every available credit will not come into my credit ledger. I have to take some positive action. I should take the credit. Taking credit is not a compulsion. It's a choice. Taking credit is not a compulsion. It's a choice. So when credit is available, the aspect of I have availed it seems to be absent from section 41.1. But once I have taken it, then it will appear in my credit ledger. Since it is no longer provisional, I cannot say, I did not know, I had some doubts, etc. 41.2 says, if the supplier A has defaulted in depositing the tax, the credit that I have taken has to be reversed with interest. Credit that I have taken, I have to reverse with interest. The most interesting provision here I find is the proviso to 41.2. It says, when your supplier goes and regularizes his defaults, then what you have reversed because of his default, you can restore. What is not provided in this section is permitted. What is not prohibited in this section is permitted. What this section does not prohibit is there is no time limit. So in theory, what I will do, I will claim 100 crores credit this month. I will claim 100 crores credit this month. I will reverse it under 41(2). When there is doubt whether credit is allowable, not allowable, I will take the credit in 3B, reverse it under 41(2). Whenever the doubt gets resolved, I will restore it back, because the system, like I said, has data. It does not have its own system of regulating it. So therefore, 41(2) can become the equivalent of Rule 37(4). What is Rule 37(4)? If you don't pay your suppliers within the 6 months time limit, you have to reverse the credit. Later on 200th day or any other time when you pay your suppliers, you can take back the credit. To take back the credit under 37(4), there is no time limit. But to take the credit for the first time, 16(4) time limit is there. So in theory, what I'm thinking is, all the credit you take it in the month it is available. If you're not sure whether you have to take it, you can take it, it is allowed, not allowed, reverse under 41(2), wait for the doubt to get cleared. When will the doubt get cleared? 3 months, 6 months, 3 years, 10 years. Whenever Supreme Court gives a decision, I can restore it under 41(2). So therefore, this aspect seems to have addressed one side of the requirement, but not the places where it can go wrong. So look at it from this point of view. This taking and reversing is a big challenge for, we've already seen credit available, accrued but not due, and credit which is taken. Here, what is taken can also be taken into another control account where it is reversed and now to be restored after my supplier does the compliance. Okay, so we can understand section 41. We can visualize some practical situations where 41 can work both ways. But anything that is that requires close monitoring is bound to throw up errors, because while monitoring it, someone may not do it the way it is required to be done. So therefore, this seems to be an area where I think it is going to be system driven. System will tell you this is a credit. Don't apply your mind about it. Take what the system tells you. But then in commercial sense, what the system is allowing and what expenses I'm incurring, what purchases I'm making can have a gap. So I have to drill down invoice level, find out who my suppliers are, because of whom I'm ending up in this situation, and then visualize what steps need to be taken. So therefore, 41 poses that challenge because it does not lay down those conditions. Next, the time limit that is not specified in 41(2) proviso. 43A provisions have been omitted, are sought to be omitted. 43A was introduced, not notified. Now 43A, before it gets notified, is sought to be omitted because this 20%, 5%, all of that is now gone. 38 is now going to decide all those aspects as far as what is credit is concerned. Next, when you look at 49 dealing with the filing payment of the taxes itself, previously you had provisions which said within the conditions that can be prescribed. Today, words are being inserted to say conditions and restrictions that may be prescribed. So what happens is, we will find government introducing restrictions after you have found out what is your net tax liability that you need to discharge. So that is, in a sense, it could be unsettling to identify what those conditions are. So look at it from that perspective and we will be able to recognize what needs to be done. Rajesh has mentioned that we will need to continue for some more time, so we'll continue. All right. 49(12). This is a new provision that is sought to be inserted. What does 49 tell you is, the government has been given powers to prescribe class of registered persons who will have an upper limit as far as payment of tax through credit. What does this mean? We've seen this in Rule 86B, where it talks about, in certain instances, the government can specify that you must pay output tax by cash only, at least to the extent of 1% is what 86B talks about. But here, the section itself contains a provision. Government can prescribe class of persons who will have a maximum limit which can be paid by credit. So the remainder they will have to pay by cash. Now what 4912 can do is, government can specify certain class of persons, of registered persons, you have to pay 5% by cash. Credit utilize, even if you have credit, you cannot utilize credit to pay all your taxes. Now, why will credit accumulation take place? I'll give an example. Credit accumulation will take place because of inventory buildup. If I have large inventory buildup, I will have a lot of credit. When I start making sales, I will discharge all my output tax through credit. I will not have to pay it through cash. But if I'm notified, prescribed under section 4912, if it says 5% you have to pay by cash, even though I have credit, 95% only I have to pay by cash. And I'm not saying 5% is the prescribed limit. Even that limit has to be prescribed and the class of persons to whom this requirement will become applicable. Let's take an example, areca, tobacco. Many such products can get notified to say that you have to pay by cash to this extent. This brings up the question, what is input tax credit? If input tax credit is output tax prepaid, how can my prepaid card not be usable? How can my prepaid card have a limit saying you can't use more than this? It's like your wallets where they add these points saying you have to use it only to spend on this. You can use this coupon only if you spend more than 500 rupees. Only on our app you can spend. You can't go to some. So these restrictions seems to be flowing out of section 4912. And if someone has been prescribed under 4912, but he defaults, it is one of the conditions in section 38 also. So therefore, this can have lot of cross linkages. If I pull one sleeve like this side goes up. So we have to monitor this so closely to identify how these, which are the class of persons who will get notified. Another area where credit accumulation can happen is where there's capitalization. There's a lot of investment in capital goods. I will accumulate a lot of credit. Why should I not get to use all of these credits? Becomes another area. Not everyone is someone who is likely to indulge in undervaluation of outward supplies. For that matter, if I'm selling at a loss, do you know any businesses where they never make profit, yet they're very happy? There are a lot of businesses. All of us celebrate in media. There are businesses, nobody bothers whether they're making losses. 4,500 crore revenue, 3,500 crore loss, and they're celebrating. Excuse me. The model in those businesses work very differently. If those businesses come in for 4912 prescription, it could become a challenge as to what will they do with all those input tax credits. Moving on from there, we look at section 54. Please bear in mind, 54 is a very important section because if I have paid 50,000 rupees excess tax this month, what will I do? Next month, I will reduce my tax payment so that I know I have paid the tax correctly for the whole year. GST does not permit this. Although Circular 26 of December 2017 says that you are eligible to make corrections if you have paid excess, etc., I'm afraid it is losing its relevance with all these changes. If you have paid excess, please file a refund application and claim refund. If you have paid less in the second month, you will be receiving a demand as far as this tax is concerned. So section 54 becomes important. Every time we see an amendment in section 54, please bear in mind the importance being given to refunds is only increasing. Which refund, what category, what is the time limit of 2 years, when will it be counted, what is the starting date for that 2 years becomes relevant. This year also we see a proposal being introduced to make amendment as far as how corrections have to be made, and the 2 years time limit in case of refunds for supplies to SCZs is being specified from the date when you file those returns. Cash refunds also, when will you file it, needs to be identified, how this will be looked at. So section 54 to me seems like a important provision where government is training its sites. Conspicuous by its absence is the issue in rule 9610 that does not seem to have been addressed. 9610 provided various restrictions. A lot of cases are now pending in courts because exporters who have claimed duty exemption on their inward supplies are barred from the rebate scheme because of Rule 9610. We don't see anything in that direction identified here. Perhaps it will get resolved when the rules are amended, or the rules may remain and make these exporters disentitled to those refunds. Next, when we look at certain provisions, you will find that some corrections have been made. The way corrections have been made also is interesting, because those corrections are given retrospective effect. Two things I will point out. Where there is any waste generated out of production of fish meal, the law very clearly now says, with effect from 1st July 2017, the proposal is that there will be no incidence of tax in this respect. However, as you know, fish meal issue was a big issue last 3 years. If anyone has discharged tax, you will not get refund. But if you have not discharged tax, then you will no longer have to pay tax. This becomes very challenging, because those who came forward did not want to litigate and complied with it. They are now left in a situation where they have to forego what they have discharged. But those who litigated and continued, they don't have any more liability. Does this send out a message to taxpayers? I think the message to taxpayers is, be sure of your rights, be sure of your remedies, be aware of your safeguards in the law. If you fritter away your rights and remedies available in the law, you are only responsible for it. Think of it as accepted peril. Accepted peril would be, if you buy a nice brand new car and you go out onto a very busy street and someone knocks into your car and dents your car, who's responsible for it? You are only responsible for it. Many times we will find people, get down out of their vehicles and start arguing especially in a very busy street. They will both get down on the car. First they will speak in English, then they will turn to Kannada, then the language will deteriorate, and the conclusion is that somebody has to pay the other person money because of negligence. They don't understand that the law does not work that way. You have insurance for your vehicle, I have insurance for my vehicle. You go claim your insurance, I will go and claim my insurance. No, you have to pay. You only came from the wrong side. That is called accident. I am not saying that I caused the accident. Many people, no, I came, you are only wrong. You witnessed those fights. I am perfect. Government only changed the direction of the road suddenly overnight. I am perfect. All of you are wrong. The other person says, no. That is not the way it works. If I have caused the accident, that is fact. I have caused the accident. Then you have to pay me money. What section? No section. I have caused the accident. That is why it is called accident. You go and claim your insurance. I will go and claim my insurance. In GST, we have to be aware that if we cause some accident, we are responsible for the consequence. Another related amendment that I seem to have skipped is section 50. Very important provision regarding interest. Interest provision is very important for us to identify, because interest provisions contain a very significant provision that we have to look at. The reason why we have to look at the interest provision is, in the past, taxpayers have been saddled with liability. Government has come forward, said you're liable to pay interest, and taxpayers have discharged interest. I'll give you two examples to contrast this. I have taken ITC. I did not know I was not supposed to take ITC. Department raised an objection. I reversed that ITC. When I reversed that ITC, department said, the rate of interest prescribed is 24%. You are liable to pay interest at 24%. I have discharged interest. An amendment is made in GST law. In the rate notification for interest, with effect from 1st July 2017, the interest will be 18%. So I already have first at least a refund of 6% and that I need to claim. The second aspect is interest availed and utilized will attract interest under the new provision. This new provision is in the finance bill, but the GST Council has made a decision that this amendment will be given effect from 1st July 2017, and that amendment also says in the bill that it will take effect from 1st July 2017. Friends, when you look at it from that point of view, what happens to someone who has availed credit, reversed without utilizing, and paid 24% interest? He will be eligible for refund of the entire 24%. he will be eligible for refund of the entire 24%. One of the significant factors that will be looked at when refunds are being claimed is unjust enrichment. Have you passed on the burden to somebody else? Interest obviously will not be retained in the balance sheet. It will be expensed in that year's P&L as a period cost. Even then, this interest refund of that is available should be identified and claimed. Next aspect is this interest is payable when you avail and utilize ITC, isn't it? Does ITC include transition credit? I have claimed transition credit that I was not supposed to claim. I have claimed transition credit that I was not supposed to claim. Department raised an objection. I reversed the transition credit. Whether they objected or I realized on my own, I reversed the credit after about 6 months. Should I pay interest? See, Nazir Ahmad versus King Emperor, Privy Council decided this in 1936. When power is given to do a particular thing, that thing must be done in that manner only or not at all. If you do it like this or don't do it at all. Many tax officers are not yet admitting this fact, saying that if you have to pay something, no matter what the procedure says, I will go after you and you have to pay. And the sad part is taxpayers also don't understand. Many notices that are flying around, you will find that many of them are not in accordance with the provisions of law. But taxpayers are queuing up to file replies, to pay the demand because they say, I don't want any dispute. Disputes are inherent in GST because two views are possible in GST. Not because there is some confusion in the section, because two opposing motivations are at work. Taxpayer has one motivation, tax administrator has a different motivation. Since two views are possible, disputes are inherent. We just need to equip ourselves to identify these disputes and recognize how we need to respond. Not every communication from the department should be surrendered to and responded without identifying what is the provision, how they're asking. Look at this provision. Input tax credit availed and utilized will attract interest liability. Is transition credit and input tax credit? 262 and 63 very clearly says what is input tax credit? IGST paid under Customs Act, IGST paid under IGST Act, CGST, SGST, UTGST, any of these taxes paid under 9(3), reverse charge, 9(4), 5(3) of IGST Act, 5(4). It does not say transition credit. When transition credit is not a input tax credit, section 50 subsection 3 cannot apply to transition credit, which means there is no provision to demand interest on transition credit. Now let's say I have taken transition credit, I have reversed without utilizing, there is no provision to demand interest, not under the old law, not under the new law. What if I have taken transition credit and utilized it? Now when I have utilized it, department will demand tax from me. If department demands tax from me, how can they demand the tax? There are two ways. They can demand the tax as ineligible transition credit. They can demand tax as ineligible transition credit. Interest cannot be demanded. There is no interest provision. They can say output tax paid out of ineligible transition credit is not paid. Unpaid output tax can be demanded because the credit which you used to discharge output tax, when that credit vanishes, the output tax is now hanging without any corresponding discharge of liability. If they demand output tax, then interest can be demanded under 50 subsection 1. It all depends on how that notice is issued. Today, sitting here, if one were to say, yes, you have to pay interest, please bear in mind, it does not matter what the truth is. What matters is what the facts are. What are the facts? You will know only when you get a notice. It is for the state to choose what they want to prosecute, what they don't want to prosecute. When ineligible transition credits have been utilized, department can choose to demand it as ineligible transition credit, or they can demand it as unpaid output tax. And sitting here, when an inquiry is going or audit is being conducted, you don't know how they will choose this. So I'll take a few more minutes and explain some important things since we come to the end of these provisions in the budget proposals. I want to mention this aspect. Taxpayer, first of all, responds to any provision in GST in three different states of mind. First, there is fear. Then there is anger. Then there is disappointment. Fear, anger, disappointment. If you see any discussion among professional circles that we have, as soon as we land, all the provisions are highlighted, marked out. We want to come in with our objections to where the provisions are being laid out. Anger, fear, anger, disappointment. Fear because we think, oh, we made a mistake. Now it has been caught. What do I do? How do I explain to client? Who's going to answer the client? Anger because look at how these provisions are being made. This is not according to the principle of GST, although I don't know where someone has these principles. The third is disappointment. How can the law be made like this? All these three are counterintuitive. These are the three things that as tax professionals we should stay away from. It has to be very binary. Is it payable, not payable? If it is payable, it all depends on what question. Tendency is, many times we've seen this, especially in our members' meetings and study groups, any topic is mentioned, we already have answers. Sir, but the answer is not relevant to the question. It doesn't matter, sir, what the question is. You please listen to what I have to say. We tend to launch into some part of the investigation itself. Three things I want to bring up for you to consider, please. Taxpayer has a tendency to believe that he has to prove his innocence. In GST, taxpayer has no burden to prove his innocence. Taxpayer has to only sit back and let revenue prove his guilt. That is first aspect we have to really get into our system. Second, taxpayer has a tendency to take any investigation work that is outsourced by the department. Department will say, you have not paid your, reversed your credits correctly. Please do some calculation and show it to me. Yes, sir, don't worry. I will do Excel, VLOOKUP, Power Lookup. I will do pivot tables and I will come out with some calculation to show that I have done everything correctly. Taxpayer does not have to accept subcontracting or outsourcing of investigation. Department has to do investigation. Remember, show cause notice is the culmination of investigation. Once investigation is concluded, that is when the notice has to be issued. If you look at section 75(7), very clearly it says, adjudicating authority does not have the power to do anything but decide based on the grounds in the show cause notice. What grounds are stated in the show cause notice? If those grounds are wrong or incomplete, the adjudicating authority can say, that is not the reason why you have to. I will tell you why it has to be demanded. I'll give you two examples that has completely shaken my confidence as far as how tax administration looks at GST law. I got one show cause notice demanding GST on EPS, earnings per share, multiplied by number of shares issued to the holding company into 1% into 18% GST. So I was completely confused when I saw this proposal. So we said, no, we don't agree with this. Finally, notice got issued. We replied saying that this is, if you're taxing EPS, then in a year when I make a loss, what will you do? You'll give me money. No, negative we will ignore, positive only. So therefore, EPS is being taxed, please note. Next, another instance, your depreciation is 16 crores. Adengri, how can you have so much depreciation? Too much it is. Please pay 18% on your depreciation amount of 16 crores. On 16 crores, 18%. No, cost plus 10%. 110% of depreciation into 18% tax. Now, during the hearing, we have to argue why depreciation should not be taxed. The short argument that was made was, if there is a permanent transfer of business assets, it is a supply of goods, para 4B, second schedule. Sir, you have adopted 9983 as the HSN code to levy tax. You are taxing it as a service. According to me, it is a goods. You cannot now argue with someone saying that depreciation should not be 16 crores. It has to be a small amount, such a high amount of depreciation. So therefore, when you visualize, you will find that interpretations are being taken that are some places where there is a different view that is possible, I can understand. But some places where depreciation, EPS, so someone is trying to examine different innovative ways to interpret this law. So definitely we are going to face notices. Anyone who has not got notices, you will get it soon. So therefore, please ask yourself, how prepared are we to respond to notices? I would sincerely submit, fear, anger, disappointment are not the right emotions to feel when we look at notices. It's a headache, it's a nuisance. Who's going to deal with this? I don't like to do this. I don't want to go to the that is not the way we need to respond, because if I have done an assessment and the department believes that I am wrong, I will have to wait, allow the department, because please bear with the due process of law. This law has so many safeguards that it is in the taxpayer's best interest not to pursue certain approaches that we have always done in the past. In the past, what has been done? Who is the officer? Oh, I know this gentleman. He's a very nice person. All those things are not. Who is this person? I don't know. I'll ask Chetty sir. Maybe he has contacts. He will know some officer. That is, GST does not require personal interaction. Everything has to be written down by the officer. Everything has to be written down by the taxpayer. So response to departmental notices have to be thought through. It is not about proving your innocence. It is about first understanding the question. If you understand the question, you will know what answer to provide. When you look at how notices are being sent, in all sincerity, those notices are being sent. You can't fault the officer. Officer finds that there's something wrong. In all sincerity, notices are being sent. But it is important to know which section, what action has to be taken. So when someone said this, one of our senior members, he made a mention of this, and it stayed in my mind for a long time. We may know a lot of things about the business. We know a lot about the accounts. We know about the 99C. We know many things about GST. But when a question is put, wisdom is to know when not to speak. I thank Branch for giving me this opportunity and all members for your participation. This is certainly something that's important for us to spend time studying the budget proposals, because these are going to throw some light as far as how we will need to proceed, identify when this will actually take effect. Between now and the budget getting passed, please monitor what is the Finance Act that is going to come out, compare that with the Act and the bill provisions to see if there have been any changes in the interim. I thank all of you for your participation. Thank you very much.
Friends, we had a fantastic session from Jatin sir. When GST introduced, everyone thought it's going to be good and simple tax. But after listening from him now, I'm really confused. So the officers are innovative to tax on EPS and depreciation and so many things. So many notices are expected, and I think we need to be much more professional and answer the give the response to the notice professionally. That is what the requirement of the GST. I think it's a professional opportunity. I believe we need not worry too much. It is their job to issue notice and our professional work to reply to that. And in between the grievance of any industry, I think definitely they will reach to the appropriate forum. With that note, once again, our heartfelt thanks to Jatin sir. Thank you very much. As a token of appreciation and gratitude, let us present a small token of appreciation. Yeah. Please come forward. Now let us bake for 15 minutes tea bake, then we'll reassemble. Tea arranged at the canopy.
Good afternoon, everybody. At the outset, I would like to thank Bangalore branch for giving me this opportunity of sharing my whatever the study I made on this particular changes which is proposed in the context of the customs law in the budget 2022. Before I go into this particular topic, I thought it appropriate. In fact, the topics talks also about the reforms in the customs law per se. Before I get into the topic, I thought it appropriate that I need to just give little brief as to these customs, what are all the changes which are happening per se, and especially the opportunities which are there in this particular customs law and the connected area, which is where I think somewhat our professional friends are not looking into it. Probably it's a time that they can look at this particular opportunity even under the customs law and this foreign trade policy, FEMA, this connected area, because hardly we have any known professional who practices and assists the trade in compliance of these particular areas. If I look at these areas, generally at the first level, there are transactional support which the businesses look forward from the professional. And when we look at from the customs perspective, primarily the challenges or the issues which comes up are firstly the rate of tax on the goods which are being imported, where the classification is a major concern. Hitherto, what used to happen was it was based on the customs assessment. Later on, though it was shifted to self-assessment, still CHA, the custom house agents, were assisting with the clearances. So the businesses were not really looking into the actual correctness of the classification of a goods or exemption for that matter or other connected matters. So it was whatever the CHA was suggesting was going through with whatever the practical way it was happening. After self-assessment, of late, the things have changed to a faceless assessment. Now, how does this faceless assessment happens? Firstly, when the goods are imported, the documents are filed, all are filed online, and the appraiser earlier who used to be sitting in that particular customs port, now there is no such concept where that all those documents will be pushed by the system to the different officers who may be sitting in different parts of the country. So he will look into those documents based on the information, data available. He will look at it and then examine all those things and push back the file, and then that bill of entry gets assessed and it goes for clearance of the goods. There, for the officer, for assisting the officers, there will be lot of system support which gives a comparison, which gives a already or classification of similar goods, the description, and they internally also have a certain informal groups which they would have created through WhatsApp. The issues which are coming up, they share with each other. So now with the free flow of information, what would have been happening for years together are coming up for questioning. It may be a classification, essentially. Somebody says, so now I've been doing this classification for years. But if we actually get into the classification itself may be wrong. But still, it was going through. But now, whether there is any impact, now there is another thing which is getting added to this. There is a GST rates. On the one hand, we are saying that the customs rate, we are doing a classification of particular goods, but in GST, when it comes, we want to adopt the different classification because the rate of tax at the GST front when we sell those goods are different. So it is actually becoming very difficult for the business to harmonize. Now, if they go back and correct, there are some chances where for the past there may be a custom liabilities which may come up. But on the other hand, they don't want to forego the benefit which is available under the GST law, so they want to change. All these issues many businesses are facing. This is when, as a professional, we can come in and support them in that aspect of classification. In fact, I would like to share one recent incidence on this classification as against the custom vis-a-vis GST. The goods was, milk machine, milk processing machine. There is no dispute as to the customs duty. The GST notification, whatever the heading which contains, it says the milk, whatever the machine. It doesn't talk about parts. This particular client imported spare parts of that. As for the classification, there is no dispute that it falls into that 4-digit classification. But the objection which is being raised by the departmental officer is description of the goods do not contain parts. You may be 4-digit level, you may be classifying. From the customs perspective, we are going by the description. Description do not contain parts. Therefore, I am not going to give you the benefit of this particular concessional rate of GST of 12%. It is liable for 18%. In spite of reply, they are not accepting, and the matter is getting. In fact, what happens is there is an agricultural implements where we try to give an example, 4 digits, so the entire heading is covered, so everything should fall there. On the contrary, the example given to a one more entry in the same notification, where again there is a 4-digit, in the description column, there is a part specifically added with 6-digit heading. So they say, see, if they wanted to cover parts, they have mentioned it even for this particular parts. So it is not covering, so therefore you are not eligible. So I'm telling how the classification dispute of GST can also get started from the customs while assessing IGST, and correspondingly the inputs, all those things may come in picture. So we need to also know what is the classification which we are following or which is being followed at the customs level, which is where the CHA might have been doing something which we may not be looking into. So we need to look at that aspect of it. Second, various exemptions which which in fact in this budget I'm going to talk about it a little later. There is a talk about phasing out a lot of exemptions. In fact, many of them has been reduced and rationalization is being happening. So then what was their business strategy as it is vis-a-vis customs, and their costing which they were earlier making based on the prevailing customs duty. With the increase thing, there is a where the chartered accountants can pitch in and guide with the impact of the customs duty on the businesses. I think that is where one more opportunity which is possible to be there, which can be looked into. Then again, there will be valuation issues. Lot of valuation in all this faceless assessment. Lot of valuation issues are being taken. In fact, there is something called a comparable price, contemporary pricing. So based on that, the other importer has imported the same goods at time at this price, but you are importing at lower price, so you're undervaluing. All those questions. In fact, there's one specific change which is proposed in this budget as to the valuation itself to undo one of the Supreme Court decision as well on that aspect of it. Now, when I told that customs, you can actually look into customs, you cannot straight away practice only looking into customs. The connected aspects like foreign trade policy, the SEZ provisions, the FEMA, all this has to be connected, looked into together with any of the conditions and restrictions which is applicable for import of goods into India also have to be looked into. So it's a little bit wider connotation, but if you are addressing to certain sectors, it may not be taking much time for you to look into those sectors and what all are relevant for that and look into those aspects of it. Now, as I was mentioning, the opportunities for a chartered accountant in the customs laws are appearing to be very, very, encouraging. And in fact, Jatin sir would add after my session what else there can be there, because he knows that he was in fact teaching customs in the institute in the very beginning days, and he's also expert in that. So he can also add much more points as to the opportunities in this area for the professional, because with lot of additional work which is getting added to the CA practice and the new generation coming into, they can look at these customs law as a fresh opportunity in addition to the GST law. This I thought I would start with this points. Now getting into the topic, the customs law, the mandate appears to be clear. The rationale on leaving apart the legal side of it, as far as the tariff side is concerned, the government, as we can see, are giving more and more emphasis on phasing out the exemption for the importation of goods, whereas they want to support the domestic market to come up with manufacturing those goods wherever possible. In fact, in certain cases where they may not be in a position, I mean, we do not have a facility or capability to manufacture, only they want to confine those exemptions or concessions only to those type of goods, is a clear direction which the finance ministry has given, or rather indicated in their budget. Further, also, one more thing is that, to match with the international classification coding system, we have changed lot of, reorganized rather, the tariff entries, the description, and the corresponding notifications are amended to align our existing classification of goods to match with the international HSN coding system. It's all fine, but practically, while undergoing this process, there may be a lot of challenges which we see. Practically, I have come across where, when we get into the integration, try to compare the description vis-a-vis goods, the item which is being imported, always we think that there is no effective change in this reorganization, but it may finally results in certain circumstances the change in the rate itself. So we need to be aware and go through the carefully that any such things is brought to the notice of the government to give a corresponding clarification to that effect. Now, coming into the first change in this particular budget, we, as far as the people who are practicing in indirect taxes, especially litigation, we are always, talking about the decision of Honorable Supreme Court in case of Canon India. What is this Canon India decision? It's a customs case where in the customs law, it said any notice should be issued. It should be issued by a proper officer. Who is a proper officer was a question of discussion. In fact, when the goods are being imported at customs port, an officer who assesses the goods at that place and clears the goods. Subsequently, if there is a DRI who comes up and say there's an evasion and takes up the case, issues a show cause notice, it was said that that is not permissible because DRI officers or a preventive officers are not the proper officer to issue the notices as per the customs provisions. In fact, the matter went up to Supreme Court. Supreme Court in Canon India clearly held, yes, the DRI officers do not have a powers to issue a show cause notice. One. Second, there's one more decision earlier, Syed Ali. In that particular decision, there was a mention about a concurrent jurisdiction. Whether a particular assessee, can he be falling under two different officer? In other words, whether two different officer can exercise jurisdiction on a one single transaction or assessee. It's the Saad Ali case, it was said, if that is permitted, it would lead to chaotic position. This is what the word they use there. So, in fact, in this particular proposals of this particular budget, they have tried to overcome all these decisions and validate all the action which has happened. Between the canon decision and whatever the amendment proposal, there was a intermittently the circular which was issued by the government saying that all such cases where the notices are being issued, hold back, do not adjudicate the matter, keep it pending until further directions are issued. So those are all kept pending. And to my knowledge, most of the cases wherever the orders were passed following this principle, all those cases, to my knowledge, has been appealed by the department to the next forum and pending. Why I'm stating this is, there is, to my knowledge, there is nothing where somebody has got the order based on this principle and the department has not filed an appeal and it has attained the finality. If that was the case, whether those people can be get covered under this validity of the provision, to my reading, those people could have got away without getting affected with this particular thing. And maybe there is a possibility that if such finding, there is an appeal monetary limit for the department appeal. If there is any such things which was possibly left out, can only be savings. Otherwise, everybody who had taken this plea and got a favorable order where the department has filed an appeal is likely to get all those cases further and further adjudicate on the merits of the case, because what all these technical grounds on which these matters were taken up, I think all those things will be re-looked into. In fact, I had an occasion that we appeared, I think, 15 days before the budget, and we quoted this Supreme Court along with many other decisions. We clearly said, you do not have a jurisdiction, but the order is already passed before the budget, stating that there is a technical point, so therefore I need not look at it. So on merits, you do not have a case, so the appeal is dismissed. So, quoting Supreme Court also, they have not considered. This is the other side of an extreme. Now, anyhow, we are bound to file an appeal against that particular thing. This, anyhow, this provision will protect their action is what. Now, coming into that, how they have done, they have amended section 234, which defines proper officer. Further, section 3 is amended, where in section 3, they have included the customs officers. Earlier only whatever the commissioner of customs and all was there. They have added, addition to that, the preventive line. Further to that, the DRI line. Further to that, audit line also. So effectively, 3 additional wings of officers have been added to that particular definition of a customs officers. For people who may not be aware, the customs field, I mean, generally we will be there, who will be processing. Then there will be preventive, who will be looking into it. There will be again, revenue intelligence, DRI we say. Then the audit, after the self-assessment is introduced, there is a mechanism of audit which is enabled in the customs provisions. And I'll talk about audit little later, but so all of them has been now empowered to, and further section 5 is also amended to give, to cover up all these things. Further, there's one more validating provision to say, this is all, whatever the changes is from now on the one hand, but there's one more provision which is there coming in as a validating provision, which says all these amendment which is happening above will be always deemed to have been there, and they will get, and what all they have done is validated, orders pass is validated. In fact, I was reading one of the articles from one advocate. He has raised a concern that this particular wordings of validating all the actions, is it confined only to the authority or even the correctness of the order? If somebody has passed an order incorrectly on the merits, whether is it going to validate even that orders or it is only validating the authority to pass order is what was a doubt. I think the intention is clear, but reading may lead to some confusion to that effect. So I'm just bringing that, sometimes how extreme also it can be read, which can go against many of the principles. So we are saying that now effectively all these technical grounds are being put down, are being clearly said, no, you are not going to get all these technical grounds. It also gives a message, though you fight, ultimately we'll come out with some technical validation. In fact, one consequential question which I'm just posing to Jatin sir, which he can answer towards the end when the open session is there. Now, these are all amendment or changes in customs law. In couple of cases of Karnataka High Court, following the decision of canon, certain proceedings in the service tax have been stayed, where the notices were issued by DGGST. So these changes are only in customs, whether the principles can still be applied to the service tax notices which are still pending, or excise for that matter. If so, then again will there be one more round of retrospective validating provision to take care of this, is what it is like. One is prospective with a validating provision giving a retrospective validation for all the action which has been taken in the past. So effectively it's nothing but having a retrospective effect. So that is about the decision on this canon and the impact and what it makes. So though we take, because I've seen many of the replies which were filed hitherto, we would have filed only on this technical point without getting into the merits of the case. So if this type of action happens, if we have not put across, though we may not be wanting to present it, at least we should keep those grounds ready and be ready in the files, though we may not submit. If these things comes, we may have to submit, because the time lapses, the knowledge would have been forgotten, in the sense the people would have handled what was the merits, the facts which would have been there, which could have been possibly taken, all those would have been forgotten. So when any such technical things comes up, you be prepared with the technical grounds as well as on merits, that the merits grounds be in file to be used at a later point in time. This is what I suggest practically, because we see a lot of changes happens in the organization. The factual aspects gets forgotten with the people, new people coming in. So that is one point I thought we'll have to take. So we can take a clear clue that government is not going to leave us with all these technicalities unless you are lucky enough to get away before any changes happens. That's all. Now the second aspect is the customs had a practice of taking the data trend of the goods being the import data, and based on that they used to question the transaction value, reject the transaction value, and getting into reassessment. The matter went up to Supreme Court in case of Century Metals, and they questioned what is the basis on which you have questioned this particular thing. Comparative data cannot be the basis to reject the transaction value. You should have a valid reason. Section 14 read with Rule 12. You should have if you have a doubt, they did a comparison with reason to doubt versus reason to believe. They said reason to believe is different, reason to doubt is different. Reason to believe is a positive thinking, but reason to doubt means there should be some action, negative action, which you should come across to doubt that particular transaction. If there is nothing on that, you cannot invoke that particular provisions and try to get into rejecting the valuation. Now, in order to empower themselves to ask all this information, etc., they have amended section 14. One in that clause 4 is added, where for certain class of imported goods, additional obligation can be imposed, asking for those goods, and wherever there's a doubt, they can specify this information, etc., to be furnished and to carry out and question the valuation. This is as far as the valuation is concerned. One more changes which has taken place in this proposed to be taken in the budget proposal is provisions relating to advance ruling under the customs law. In fact, advance ruling has become very famous in the GST because of the various reasons, and we also very meticulously follow the advance ruling and the propositions comes out. But it is important for us. The advance ruling is though relevant to that particular SSC. You may read through the rationale given in it. If you find that rationale makes sense, the reasoning makes sense, you may try to examine your case over there. If the rationale doesn't found, I mean, you don't find that rationale having a sense and has not considered all the relevant factors and the judicial precedents as per you, then you may relook whether to adopt, follow, or not follow, sort of a thing. So, anyhow, that is from the GST perspective. But in the customs law, they have made some changes. The first change which is there is where earlier, if somebody had filed an application for advance ruling, after having filed application for advance ruling, they had a window of 30 days only to withdraw such application filed for advance ruling. Now, what they are proposing to do is, they said you can withdraw any time before the advance ruling is pronounced. I'll tell you practically what happened. One of the clients wanted certain advance ruling. We went to the advance ruling, tried to explain all our case. The questions which we came from the bench, we realized that we may not be, they are not inclined to accept the line of argument which we are taking. Then we asked, okay, we may give one more hearing. Then we had a discussion. Then we thought it may not be proper because the case may go against. Even if it comes for litigation, we'll fight it out. Then we actually filed a letter for withdrawal of the application. So, no, advance ruling, yes, but sometimes it also comes handy. If it is you are in a contract with somebody, you are telling your other party, supplier or the customer, that tax is payable, but other person is not accepting. He says, give me an evidence. So you can go to advance ruling to get an evidence in support of that. Anyhow, so I'm just telling. So they have, that is there in the GST law. There's no time limit to withdraw. Here they have in fact removed the time limit and said any time before the pronouncement happens. Once a pronouncement happens, earlier there was no time limit up to which this advance ruling is applicable. It was applicable until there is a change in facts and circumstances based on which you sought a advance ruling. Now the change which is proposed is that any advance ruling so obtained is valid for 3 years, or change in circumstances or facts based on which you sought a advance ruling, whichever is earlier. So now they've added this one more thing, that period 3 years. So you'll get a relief of the year. After that, you can just go back and want to reapply unless there's any change in the judicial proceedings, etc. Next change, which is, and in fact, what they have done is the 3 years. If you are already taken advance ruling, 5 years back, say, for them, the 3 years will be counted from the date after this finance will get enacted. From then, you will get further 3 years. So the starting point for the past will be from that day onwards. One more thing is there, the act was specifying the fees to be paid for advance ruling. Whereas now what they are saying is the fees shall be prescribed as per the rules. Basically, the fees will be through rules, not in the act. So they can keep changing, modifying, etc. That is coming into the power of the government. So this is what is the changes as far as the advance ruling is concerned. Now I told that when I was mentioning about, we'll talk about an audit. Once this self-assessment regime came in, because earlier it was clearly a customs assessment. When you wanted to import, before the goods were getting cleared, it was supposed to be assessed by the customs officers with all those examinations, etc. Then they had that got changed into a self-assessment mode. So where you will self-assess your liability, valuation, etc. If they have an objection, then only they will come out with questioning, etc. Now, especially with this faceless assessment, etc., you would have got the goods cleared and enjoying some benefits, classification, whatever would have done. In fact, there was a provision which was added enabling the audit of the importers who had imported those. Though this provision exists in the statute book, in fact, morning I was just talking to Jatin sir. I thought one of the clients they got a customs, but actually it was a customs, sorry, EOE audit was not from the customs audit as an import audit. So, to my knowledge, this customs audit have not started. So, because GST audit, you know, what all, how things we face. Customs audit also, they may come and check, you know, give me the brochure, give me the technical these things, report. No, that is now made it a self-assessment in 2011. So that is where that they can come for audit at a later point in time and do audit on whatever the sampling method with there. But presently they have not gone into it yet. They are still setting up their internal wing to start that particular what do you say, audit. So once it comes up, again, this is when I said a professional like us can get involved and be aware to support that and give the view, because obviously there will be difference of opinion between them. Then that will obviously lead to a litigation. The litigation at that stage is better to handle than the litigation being handled at the clearance, because practically whoever handles the customs know that there is going to be a lot of pressure which will be put by the customs officer if you don't agree to their assessment, their classification, their valuation, because you need a goods, because otherwise your business gets altered. Are they going to say we are going to blacklist you, we will issue an arrest warrant? These type of threats are going to be issued unnecessarily. So they are forced to clear the goods. But in case of an audit, it is not a case so, until unless they give a clear-cut clarity to saying. In fact, there's one proposal which is being made in this where I'll come to that. So there we may be able to bring in all the technical points, legal points, issues, the evidences, all those aspects which is required to be taken as a professional. We can take all those arguments, fight it out legally, and limitation period may come. So many possible grounds to protect the past instances. So there, I think, is a very good opportunity if this customs audit of the importer starts. Then the next thing is there is one provision which is being added where it says if during the course of audit or inquiry or investigation, if something is found as to one, the short payment or non-payment of duties, etc. Two, the benefits of scheme, the scripts, etc. you would have wrongly availed, or the duty drawbacks you would have wrongly claimed, etc. In all those things, that officers will make their observations and push the records to the concerned officer who's in charge of the assessment of the imports, or who has given or issued the scripts, etc., or who has sanctioned the drawbacks. The matter will be referred to them and they are going to adjudicate the matter. So they have now made the segregation of the powers as to the people who are going to investigate. They will not decide. There is going to be transferred to the adjudicating authority, is what is one more change which is proposed. Next is one more change which is being commented upon as to information. The Act is proposing that any information on imports of goods or export of goods, or the importer or exporter, shall not be published unless except by the government. If any such thing happens, they are liable to a penalty or prosecution up to 6 months or 50,000 or both. So is it, are they trying to curtail the freedom of sharing information, or maybe they are trying to say wrong information or the data? In fact, practically, I have seen some people had all this database readily with them, who are all have imported a particular goods from which port at which rate, and this data was available for a cost. So somebody wants to snatch away the things, go to the thing. It was impacting the business adversely in some sectors. Probably they would have complained or taken this matter in order to put them on hold, and most of this data actually was not coming through a proper channel. It was not coming through a right source, but it was getting circulated. So they have clearly said published, that published includes photocopying or making copy or electronic or publication. So all these things is covered. So effectively they say only the importer exporter should know his data, and the customs, the offices, for administration purpose they can have it, but not for the general public to have consumption, except for the government to release those data for the general public. There is again procedural changes as far as the import of goods at concessional rate of duty rules 2017. In fact, alongside of introduction of a GST, there was a rationalization which they had to make for EOUs. The concept of EOUs were effectively simplified, where they said no bonding. The bonding is effectively not there. You have to follow this particular provisions of this rule. You need to follow and provide all the information or the thing. So they actually simplified per se. But still, practically, if somebody goes and sees, they're still in the habit of maintaining all those old system of bonding procedure, though they maintain that whatever the amount debited to the bond, etc., but there's no specifically a bonding procedure, extension of bond, etc. Further, recently also there was a relaxation of extension of all the any licenses, etc., which is having a time limit to expire. They said until those will go on until it is cancelled or for the violation of those purposes. Now here in these rules, what are all the changes they are trying to make? First, they are saying this entire data information to be fed in for these rules are through a common portal. So it is not going to be an individual. Like a GST portal, there's going to be a specific portal for filling in the details relating to these rules. Next is any importer who wants to avail the benefit of this rule has to furnish one-time information in form IGCR 1. There is a form in which they will have to sort of a registration. They'll fill up all the information, and once that is accepted by the portal, they will be issued with import of goods at concessional rate identification number. So this number will be the basis. So when any importer wants to use the, avail the benefit of this rule as per any notification, they need to quote this particular number along with the bond number. So what is that it is going to happen? So that import assessment, when it happens, automatically, the officer is going to assess the bill of entry based on these details. And once the bill of entry is assessed and accepted, the exemption is extended, automatically the bond, wherever required, will be debited with that amount in the common portal itself. So this is what they are proposing to do. And when it comes to records keeping, there is no requirement of specific intimation to be given on each and every receipt of goods. There is no requirement. So, however, they need to maintain their own records in a particular format, and wherein the date of receipt and all they need to maintain. Further, if the goods are imported, but for whatever reason the goods are received in short, or you don't receive the goods at all, so you assess the duty but the goods you didn't receive, then because portal has already debited the duty relevant to that, so there's a specific form IGCR2, where to that extent you need to upload the details in that particular form. Then there's going to be a monthly statement which is required to be filed in IGCR 3. So this is what is there. And further, they have said there is going to be a procedure which is going to be notified as regards to the job work or rework, return, all those things. There's going to be a separate set of procedure which they're going to come out with. Then next point, which is the changes which we heard on the floor of the Parliament by the Honorable Finance Minister, was that the SEZ provisions, we are going to make a complete changes in the legislation of SEZ. We want to include state into that particular ambit, and also we want to give extend the benefit to the existing industrial units, etc. was being told, but still we are away. We have to come out with the fine prints, how it is going to come, what are all the aspects. But in addition to that, they are also talking about simplification of the procedures through a common portal or the electronic system of monitoring only on a risk-based verification, not in each and every case, to say that the SEZ operations will be eased out and liberalized. So this is what is said. We need to wait. They are saying by September 2022, this scheme would be brought into picture and operationalized. Okay. One more change which is there is about the project imports. What is this project imports? Certain times when you are carrying out certain notified projects or the projects which are covered in that particular chapter, there may be varieties of goods, each of which may be falling into different rate of tax. Instead of that, there used to be one consolidated concessional rate, either nil, 2.5% or 5%, as the case may be. With there's a procedure of registration of the project through a project import, etc. And in such a case, all the imports in respect of those projects were permitted to be cleared under that one single rate at a concessional rate or whatever it is which was fixed. Now, what is being said is that this particular scheme is going to be phased out. What it is being said is you are permitted to register any of your projects upcoming or whatever it is, up to September 2022. You are permitted to register. Now, up to September 2022, if you register, you are permitted to import those goods up to September 2023. After 2023, you can't import under this particular scheme. Second, if any projects which are not registered up before September 2022, from September 2022 onwards, they may not get this benefit anyhow. So this is what is the thing which has been changed. So we need were planning for that. Similarly, there is also talk about the capital goods rate increase in a phased manner also. When it comes to certain exemptions, they are saying that for 350 items, exemption will be phased out for a period of time. So there's a big list which they are looking into. In fact, this rationalization and all started almost more than a year back. In September, one chunk was looked into. Now there's one more chunk they have been doing it. And at the same time, they're harmonizing all the entries to match with the HSN, the amended or the new HSN released by the UN, the customs WTO thing, where they are modified. So somebody who are using the old explanatory notes to the HSN may have to look at the new one and get the new amended HSN explanatory notes for the updated and amended. In fact, the tariff is already amended, and if you see the customs, CBSE website, if you will find the customs tariff as updated as on 1st January 2022. One more changes which has been done is, if you see, always somebody when we were looking at, we used to say there's a tariff rate, there's an effective rate. What is this tariff rate? What is effective rate? If you look at the customs tariff, first schedule customs tariff for the import of goods, there used to be one entry, one goods, and there used to be one rate. Then the government used to issue a notification whereby they used to say for this goods, the rate of tax, effective rate of tax is this. So the tariff, though it was 10%, the notification was making it at 7.5%. The reason was, if any changes to be made for the rate, the tariff amendment, we had to go to Parliament to make a changes, whereas in tariff was always at a little higher side. So if they wanted to give a relief, they used to give a relief through a notification which government could have done. This was the rationale which was being followed. Now it is being said, why confusion 2-2? We will try to rationalize as much as possible. We are going to remove as many entries as possible from an exemption notification and bring out those entries directly into the tariff itself. So you need not see two things. I think only then that exemption notification entries will have a lesser entries for us to enter. So our tariff books size may get reduced to some extent. So this is one more thing which is being done. Again, in this exercise, if there is any errors and all, it may have some impact which some importers may have to undergo. Next, as I was mentioning in the beginning, many of the rationale which I told, the government is looking for Make in India support. So wherever possible, what all the goods which can be manufactured, which is available in India, they are trying to phase out the exemption. So they want them to buy from an Indian market, make the Indian industry grow rather than importing thing. At the same time, in case of a steel, where the price have increased substantially on the scrap, etc., there the anti-dumping duty which was being there levied, that has been removed, so that the price of the steel, because steel prices are going up, so they want that import to come in to balance the So these are all, rate changes for different products, depends on sector to sector, which one has to look at from the that particular perspective. One more aspect which is there, which came through a clarification, was the cess. Whether the cess is applicable when the basic duty is exempted. Right? So basic custom duty, assume it is an exempted. So while computing cess, whether cess also, which is to be applied on that particular tax, should be 0, or irrespective of that, we need to apply the cess. The CBIC has come out with a clarification saying that when the basic duty is exempted, then the cess would also be exempted. It is, though welcome, everybody likes it. Judicially, if we look at it, there is a Supreme Court decision which said merely exempting a basic duty does not mean there is an exemption for the cess. Even though the basic duty is exempted, cess is to be applied in the context of excise, that particular decision. But anyhow, that is the thing. Now, between circular and a decision, which one to be applied? Obviously, will apply. The officers are bound to follow. So it's not bound actually. There's a Supreme Court decision which says that any circular which is contradictory to the law is to be considered as non-existing or invalid. So some officer can still take that particular proposition, but not now. Now, one more consequential impact is somebody uses a script and pays the customs duty. Actually, he doesn't pays it. He debits in script, but consequently there will be an exemption in the customs notification. Now, if whether even that basic customs duty, if we can be said to be exempted in such scenario, thereby cess also will get exempted, or cess will not be exempted in that scenario. So this issues also may get raised, and issues may get into litigation per se. So I think hopefully I've covered all the legal changes from the customs perspective. Any questions if it's there, or would like to ask Jatin sir to add anything? Questions, I don't know whether.
No, it won't come in 2B. Under section 38(2), there is a present provision to say that you have to insert the IGST paid on imports. So presently it is not linked. The proposal is to link IceGate. Recently I saw a circular that press release that IceGate is being linked to GST portal. So IGST paid, if it populates to 2B, you will find it. If it doesn't populate, you will take it. Yes, yes. Don't take it twice. But if you haven't taken it, take it now.
Jatin sir, it is showing, but it is not correct and complete.
No, don't take it.
Yes, yes.
Right. Section says you have to wait till all the vesting conditions are fulfilled. But the portal is forcing you to take the credit. Correct. Correct. Because next month, if you haven't taken, it's not carrying forward. This is the example that sir was also explaining. If I haven't taken in one previous month, can I take that delta in the next month? You should be eligible to take it. My suggestion is you take that in the next month. You will receive a scrutiny notice in ASMT 10. You would explain that it was earlier months because it was goods in transit. Don't take it ahead of time.
Alternatively, what suggestion also is coming, I'll tell Jatin sir. What is being told is, okay, now actually your example is on 30th, I clear the goods at customs. I have not received. Not actually import the supply, local supply. He has dispatched on 30th, he has uploaded. But I received on 2nd. So as far as in my books of accounts, it is coming in the next month. So the apprehension is that if I do not take the credit in that month, in fact, there's a question over there. There's another question there. So I don't take credit in the say November month, but I take it in the December month. That's not exam. So December month, the December month I may not have any credits at all. If I take this, they say difference, they will issue a notice. So alternatively, what was suggested by one of the CEOs, sir, I will take in that month, but I will not utilize it. I will keep that amount as it is, but I will utilize in the next month when I'm really entitled for. But the challenge again I explained to them was, this may not be possible because our order of utilization doesn't permit to keep IGST as it is, CGST as it is, SGST as it is. So it's going to get mixed up. So this is a practical difficulty which I do not appears to have been addressed in their internal system. Now all those things are going to crop up, and there's one question, Jatin sir, where they're saying, can a credit be claimed for the in the returns to be filed for November, which is December 20th?
See, whenever these dates are specified based on the due date for filing a return, then that there is some clarity. But when a hard close date like November 30th is specified, it becomes difficult to give an answer because we still don't know what that interpretation of November 30th might be. So to answer that question, then it is not about the November return filed on December 20th. Whenever you file, 30th November is the last date by when the 3B should have been filed. So it's not on December 20th.
In other words, you would have shown a credit in the March month return, February month return, August month return, or September month return. You file that any of those return where you have shown the credit of the previous financial year within 30th November. That is what they are trying to say.
Will not, I would suggest you take it according to your accounts in the next month when you receive it. 1 month you have taken less credit according to 2B. Next month you have taken excess. They will ask you a question. Provide them the answer. Yes. Absolutely.
That is true. That is true.
I would recommend that.
And also,
In transit books. Very true, very true.
in fact, what as Jatin sir was mentioning in his session, the 2B will have two parts, eligible and restricted. So in your books, consult of both plus something which is not reported. There's a 3 reconciliation. Then restricted you will not take. Out of the restricted, when it becomes out of the restricted, when again it will come into the eligible, which month, whether it's going to be shifted, whether it's the running account or the account for that month. There's a lot of confusion still exists. They only design the provision. Practically how the design or structure is going to come will have a lot of things.
Some, to some extent.
Yeah.
No, but he's saying this, 2 beats appearing in January. That is the problem. December.
Jatin sir, I would like you to just add as far as the customs and the connected subjects, the opportunity for CS.
Opportunity for CA. Sure. See, as far as customs law is concerned, as on tariffs, there has been a consistent effort to scale down the exemptions, the number of entries where exemptions are issued, the number of notifications, now unifying the exemptions and the tariff notifications. From an opportunity point of view, customs related transactions and advice to taxpayers regarding those transactions today is coming from, like Rajesh was mentioning, from clearing agents. If you ask any importer, where does he get his knowledge and advice about customs law? It will come from Hindi cinema or from clearing agents. You understand? So therefore, this is certainly an area where knowledge of finance, knowledge of the business and customs law is necessary, and chartered accountants are a wonderful position placed to get into those areas. Now, we often tend to think that we'll only have a role to play as far as advisory or litigation is concerned. In GST, there's extensive amount of planning, there's extensive amount of post-import audit, management audit to review the correctness of compliances, and incentive schemes. If you see last maybe 8-10 years, incentive schemes have undergone changes so significantly that taxpayers have either forfeited any incentives or claimed incentives which they should not have claimed and now keeping their fingers crossed. So these areas of monitoring and audit, it is very much in our area of expertise. So certainly this is something that we can get into. There is some amount of reluctance to get into a new area, but we should not look at customs as a new area, but another area where our existing skills of audit and verification can be extended. So certainly that is something that our members can get into.
In fact, I would like to share my experience of one of the thing. There was a application filed MES. They were supposed to have declared in the shipping bill, etc., which they had not declared, and the quantum of benefit which they were entitled were in crores. By mistakenly, CHA had not guided or whatever it is. Then they approached, it was rejected. Then we had to file a writ in that particular case, and as per the present status, the writ, similar matters, the writ is allowed in favor, and if that goes through, we may get a complete, that benefit of that crore of rupees, more than, it's actually multiple crores over there involved. I'm telling, so there the issue is, it was actually where if the persons who are doing an audit, a statutory audit, if they were aware, why are they not claiming these benefits? Or they had a consultant who could have looked into all these aspects. As Jatin said, management audit, the internal audit can actually add a lot of value addition to the businesses where the benefits which could have been availed could be prompted and taken. Okay. No, I think both, another that we covered in question answers.
There was one more question that I think I picked up. It said we are getting blanket notices for multiple issues. See, as far as notices are concerned, we have to differentiate between an inquiry titled notice and a show cause notice. Both are often thought of as the synonyms of each other. If there is a show cause notice, it has to flow from only 4 sections, 63, 73, 74 or 76. If it is an inquiry, there are several other provisions under which it can be issued. So we'll have to identify under which provision this is flowing under. If officers issue letters calling for information, taxpayers need to be very careful as to which jurisdictional officer is issuing it, so that taxpayer can prepare the appropriate response. It will invariably be calling for records. It will not be calling for some calculations or some other, because what they need to carry out. So if it's information being called for by the jurisdictional office, we need to identify the section under which it is being called for. Please also keep in mind that there's a tendency to outsource the investigation. Taxpayer needs to control their excitement to participate in such outsourcing activity. Limit your responses to questioning the provision, providing the facts. Providing the interpretation is not something that one needs to get into, because interpretation is for the tax officer to do. We're getting blanket notices where the officer is asking for last 5 years data for a small amount of liability. As far as this notice is an inquiry calling for information, if it is for 5 years, then perhaps it includes service tax period also. Taxpayer needs to be very confident with the tax position they have taken and not be in self-doubt. That's when all these things will come. I would strongly encourage you to please find out the provision of law under which this is being issued. If it is not under a valid provision, you are required by section 160 subsection 2 not to entertain the proceeding, and inform that you are not entertaining this proceeding because of section 160 subsection 2.
Also, in the continuation of what Jatin sir was explaining, the business or even the chartered accountants, most of them would have been handling the VAT related proceedings or VAT related transactions, interaction with the VAT department, I get a lot of questions. Sir, they have issued an endorsement. Sir, will they come for recovery? This is endorsement in audit. So, please understand once any findings coming through an audit, there is 4 stages which has to go through to finally get converted into a demand. First, audit inquiry, then audit report, then probably there's a one more thing called a DRC 01A, pre-show cause notice consultation sort of a thing, rule 142 1A under that provision, and next comes the show cause notice in DRC 01. So now you might have replied the same thing first, second, third, fourth. Finally, then there will be a hearing. After that, there is supposed to be an order. In fact, many a times the clients who may not know all these procedure things, sir, ಅದು ಅವಾಗಲೇ ಕೊಟ್ಟಿದ್ವಲ್ಲ sir, we had already given all those information there. Again, why are you typing the same thing and giving, sir? So we need to know that this, until all this process is completed, there cannot be a conclusive demand on the assessee. And as you said, once you already replied, when they issue DRC 01, you need to simply say, we already replied with our data, you have not accepted it, we go by that, please drop the proceedings based on that. You need not again repeat the same thing for the record purposes. If you don't respond, and in fact, especially this DRC 01A, I suggest that audits, anything to law you fight out, but facts be clear as to the computations, etc. Many a times, as Jatin sir did mention, the person who will be aware of the facts will be kept out. Many a times somebody else will be handling the department. They'll be only focusing on the issue, not the data and quantification, which itself could have brought down that particular thing. If you are not brought out at that stage and you admitted, etc., etc., generally there is a tendency that they miss out on this fact-based thing. If there's any factual error, they have noted down if they're proceeding. That factual data you may put it if you do not want getting too much technical at a later point in time. Yeah.
Correct. There was an audit inquiry. Audit report was issued under 65(6). Its report, the title says Rule 1014 and 65(6). It can't be under 2 different provisions. 1014 is first, based on replies. 65(6) has to be issued. It was a 101-page report. 101-page report, demanding on some 27-30 observations have been made by the audit party. I'm really amazed that they had that kind of time to sit and work on such an extensive audit. And the concluding para is, you have given 7 days time to come forward and discharge this tax. Now the taxpayer got very nervous that such a large amount of money, before even understanding these many issues, getting necessary advice, 7 days will be over. So they wanted a reply. The reply that was suggested to be filed and which was filed was, received audit report, thank you. Because under 65(6), there is no link to 79 for recovery action. But taxpayer officer also thinks that because of the VAT practice, that this is an assessment. So now you have to demand. If you are not happy, you have to file an appeal. So received audit report, thank you, was the short reply filed. Now officer called up and said, maybe you know something, which is why you have given such a short reply. What is this going on? Initially, he must have been anxious that such a reply was given. So he said, received reply, thank you. And then 65(7) was pointed out, which says that once you have issued an audit report, if the tax is not discharged, you have to issue a show cause notice. So therefore, this is something that's what Rajesh's point is, significantly different from VAT. We should not get nervous. In 7 days, you have to understand all those 27-30 points and come up with a response. Taxpayer goes after a 65(6) report. Taxpayer is meeting the department, trying to convince again, hopefully to convince them and prevail upon them to understand that this is not the way it works. Once a report has been issued, that's the end of audit. Show cause notice has to be issued, and then adjudication will take over, like Rajesh was mentioning.
Yeah. In fact,
only after that, not before that. Yes, sir. Absolutely.
Before that, it's merely a process of audit. That's all. In fact, in one of the case, to just say they issued audit report that missed out some observation. They issued an amendment order to that particular audit report, referring to 161, the rectification of mistakes apparent on record, to amend that particular audit report. As I was mentioning that you can't, once audit report is issued, they cannot change. So only possible is rectification. So since VAT regime, they are used to this rectification proceedings, they followed that again to make a changes to that effect. We are, over to, thank you, sir.
Friends, we had a fantastic session on indirect tax, including budget proposals, and especially both the specialists mentioned for all the newcomers to the practice, the opportunity available in customs audit, customs side practice. I believe it's a very, very lucrative post. I think self-assessment scheme also introduced there. I think there are a lot of opportunities available for members. I request youngsters to look into those areas which may be a lucrative one. So we had a fantastic session. The comments also received online from several members. Thank you very much on behalf of Bangalore branch. Thank you very much, Rajesh and Jatin sir. Fantastic we had. Thank you very much for all the participants. Your overwhelming response made us to organize this program. So as a token of appreciation and a gratitude, let us present a memento to T.R. Rajesh Kumar. Friends, thank you very much for all your support. So 21st is going to change over to the new managing committee. I request all of you to participate and continue support the Bangalore branch. Thank you very much. Have a nice